All right, everything looking good on my end. Should be going live here. Okay, let's get it started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening live market update. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. It is 8 p.m. Eastern Standard Time on 7/11/2021, and we're going to do a deep dive into the markets today. And like always, we will go ahead and get started with our 10-year Treasury yield. So we're seeing quite a bit of action amongst these various charts here. We've done some pretty in-depth recent videos on a bunch of this different stuff. So I'm going to keep it a little base on some of the stuff that we've covered heavily. If you want to see a little more in-depth of a look at the 10-year, I highly recommend that you go back and look at one of the previous videos. But here we are basically still oscillating inside of this gigantic channel going back to 1980s, and we have come down basically all the way to the bottom of the channel and come back up, and now here we are just over the middle portion or the heart line of the channel, and we have sold off here and are coming down. We have now retested that heart line of the channel. Let me just delete this real quick. And you can see we came down perfectly and touched it. And essentially at this point in time, just kind of looking back, you can see how many interactions we've had with the heartline along the way, how many times we found it as support and resistance. And now we came back perfectly to it. Once again, fully expected move. I know everyone was expecting rates to go straight up to like 2 or 3%. And obviously we're expecting a pullback here. We are on the monthly still in a very powerful uptrend here. Got the hard buy signal exiting the bearish control zone. Once we got that buy signal, it's basically been lift off. We were down here at 0.5% basically. Once we had two green histograms in a row on our TJD TDMACD, we started into a powerful trend to the upside. So at that point in time, essentially using these specific indicators here, we got the hard buy signal and we exited the bearish control zone. That's basically confirmation on both parts of that indicator. And then we have the third one is our green slope line on the knife angled to the upside. So again, that's our three indicators, three portions of that indicator, all confirming bullishness. And then here on the TJD TDMACD, once we have two green histograms in a row, that's our first signal of bullishness. The second signal is once the histogram itself passes over the slope line, which is still red. So that's two of our three signals. And then the third and final signal on this indicator is once this slope line flips back over to blue and has a positive slope. That is all three confirming on each of these two indicators. And then if we turn off our drawing tool here and we just take a look at the moving averages, we'll notice here that our initial signal on the moving averages is once we get the 8 and 21, the red is the 8, the yellow is the 21. Once those two indicators cross to the upside, or those two moving averages, that is our first confirmation of bullishness and long-term trend, especially on a monthly chart, which we did. We then got stopped by our next significant moving average perfectly, which is the 55 exponential. And at that point in time, actually, at this point in time, as soon as the 55 exponential ran into resistance, we expected, and we even spoke specifically about coming back down and retesting the 821 to see if it holds. So we basically find resistance at the next moving average after we break through, and then we come back down and retest those two moving averages for support. And if this holds, like I suspect that it will, we will essentially find strength here and then continue to the upside. The next move would be to test our next significant moving averages, which, we may run into resistance again and have a little trouble getting through the 55. But after we do, I would expect us to come up here. We have basically the 50 simple and then the 89 bunched up in the same spot right here, at which point in time that would give us a move up to 1.95 or 2.0, which is our next target to the upside, obviously. And then finally, we have the 200 exponential and 200 simple moving average, once again in line at 2.8. And then if we notice also, we can turn back on. So that's essentially what I'm expecting to happen with the different moving averages. Now on the monthly scale, if you look at this chart, we have been in a bear market on the 10-year Treasury yield, which means the treasuries have been in a bull market since like basically the mid 1980s. So this is going back like essentially 40 years of bearishness on the yield or bullishness on bonds. So it's going to be very difficult for us to get above the 200 exponential or simple moving average, which I don't presume to call that we will. But I think that a retest is definitely in the cards. And if we look back here at what's happened in the past also, you'll notice that we tested it once here. we tested it once here, we tested them once here, we tested them once here, and then now here we tested them again in 2018. So we've had a bunch of regular tests along the way, so it's not unrealistic to think we would get a test once again. And then if we turn back on the drawing tools, you know, it starts getting quite busy here, but we'll notice we have the neckline of our head and shoulders pattern right here, at which point in time, if we move back up and retest that area around like the 1.7 range, we expect to get the breakthrough there, and then that will eventually take us up to our measure move, and then the measure move is going to take us to the top of the channel, which also just so happens to be where the 200 exponential and simple moving average come in, and that's right around like between 2.75 and 3.0 yield on the 10-year treasury. So at this point in time, it still looks to me like we were putting in an inverted head and shoulders, and I do expect potential move to the upside here, as long as the 8 and 21 monthly moving average hold, and then of course the neckline as well. So, and then if we just go down to a shorter time frame and take a look at what's going on here, obviously we are going through a pullback in the meantime. This is of course no surprise as well. We did get the sell bit signal, the buy signal, and then the sell signal, and then our final signal that we would be going into a short-term or medium-term correction was obviously leaving the bullish control zone. So as soon as the red area in the background here came unhighlighted, and then once again using the same techniques on these indicators in the opposite direction, once we have two red histograms on the TJD TDMACD, that tells us that we want to be neutral or out of that position. Obviously that's the first of three signals. So the first one, the second one is we have now moved underneath the slope line here. So where we did have the blue slope, it is still blue, but now the histogram is underneath it. So that's our second confirmation. We'll be going into a pullback, and then the third will be once this blue flips red. So we'll notice now that the weekly and the monthly are telling us essentially the opposite. And then also the 8 and 21 are getting ready to cross to the downside here, and then once again we would expect these various moving averages to act as support and resistance accordingly. So if, like I suspect, we do go into a short to midterm correction on this, we could get down here as low as like 1.15, but again I do expect this on the monthly to hold that level and then move back to the upside. So that's our weekly. And then just to get another picture here, if we go down to a shorter time frame and we look at our daily, of course we have broken down, we found support. We specifically spoke about how we were essentially consolidating at a key fib level, and the longer we just consolidated here, the more likely we were to just break through it. And I always use that specific example of if we have a table here represented by, say, this white line, this white moving average, if you drop the bouncing ball, each time it comes down and bounces, it's going to bounce a little less high. As it loses, it's, you know, basically like momentum, and then eventually it gets to like the edge of the table and then it falls off. And then that's where we bounce off our next moving average and expect that move. So now here on the daily, after the move we've gotten to the downside, we got the hard sell signal before that sell-off, broke through the key moving averages, came down and held support. We technically broke through the 528 and the 200 exponential and just about came down to the 200 simple, but immediately we were able to reclaim that level. We'll have to see obviously on the daily how that holds, or if this was just a reaction rally off that level. But we do have the bearish control zone. We do have one histogram on the daily so far in green, so we want to wait and see how that plays out. But overall on the monthly, this still looks bullish to me. It looks like we're getting ready to go into an uptrend, or at least a nice push to the upside, but the weekly and daily are definitely looking much more bearish, at least for a short to midterm correction. So that's what we're expecting at this point in time. And then if we pull up once again our drawing tools here, you'll see that we have clearly identified our targets. The initial target was, let me turn off the moving averages again. The initial target was the measure move breakdown from our little channel that we were operating inside of. Once we broke down from that, you'll see that this 618 level was acting as our support in line with the moving average, which is what's so beautiful about Fibonacci, is that these levels will often come in, confluence with each other. Once we broke down from that, we found a perfect bounce off of our heart line of our large channel that we have drawn in here. And then again, we would expect to come back up, retest the breakdown 618 as resistance, and then break down further. That's going to take us down to the 0.5 micro Fibonacci level here at like 1.13, at which point in time again, we would expect to further break down and our final target to be met. It doesn't have to be met. There's obviously some instances in which we could change our target, but we're expecting potentially a move down here to just below 1, which is 0.94 roughly. That would be our 236 on the macro, or even as low as 0.88, which is the 382 of this fib level. So you'll see that we came up here and interacted with these fib levels quite a bit along the way up, and then we found support here, and now breaking down from support, we would expect the same thing to happen, and potentially even like a smaller pattern to develop within this, break down to our measure move, and then eventually see continuation to the upside. Now, it is possible that we hold this level and then get continuation to the upside. It's also possible that, you know, the Fed does something crazy and, you know, we break down from this level and invalidate this whole pattern and everything we're looking at. Those are obviously still possibilities. Nothing is for sure in these markets. There's no way of predicting what's going to happen. But by using these tools and a specifically definable system, using our indicators and oscillators, we're able to make, you know, consistent trades, consistent moves, and use consistent technical analysis over and over again on any asset basically, and then you know, be able to measure our level of success in these different assets and then repeat it. And that's the most important thing. So, and then if we go over to our TLT, which is the 20-year Treasury, now this is the bond, not the yields, you'll see essentially an inverse pattern. Once again, let's go to our longer time frame and work our way down. All right, so if we go to our longer pattern here, this is our monthly. We essentially have our monthly channel that we've been operating inside of. This one does not go back nearly as far. This is only back to 2002. But if you looked at this chart back to like the 1980s, we've essentially just been in a parabolic like uptrend channel. We did get that stab outside of the channel when everybody freaked out last year, and then we broke back down inside of it. And now here we are putting in essentially the inverse of the pattern on the yields. In this case, we're putting in a regular head and shoulders. We came back up here perfectly and found resistance at the 382 from the top here to the bottom here. We got a 38.2% retracement of the move down. That also lined up perfectly again with our heart line of the channel. And then at that point in time, we basically got rejected at the 8 and 21 moving average right here. Once again, I do expect this area to, if we can consolidate here long enough, it's possible we get a move back up to the top of the channel. But, you know, for this pattern to play out, I would expect something around this area to essentially fail, and then we could settle back off to the heart line, to the neckline of our pattern, and then potentially get the measure move back down to the 200 exponential simple moving average and the bottom of the channel. And then we'll notice here, based on our indicators, we did get the hard sell signal at the top of the range back here, at which point in time we obviously expected bonds to go in a short-term correction or downtrend or bearish trend. Again, this on the monthly. They've been selling off since then. This is with the Treasury, with the Federal Reserve rather, buying like $80 billion in treasuries per month, plus 80 billion or more. So at that point in time, you know, you can tell that there is quite a bit of pressure on the bonds. So now we're finally seeing a little bit of a move to the upside as people are a little worried about the markets. That's telling us something is shifting. You know, I don't like to use the term smart money and dumb money necessarily, but as far as institutional or old money is concerned, you know, for this whole entire time here, they were basically out of bonds, selling bonds, net sellers of bonds, even with the Federal Reserve trying to prop up the bond prices. And now here we see there's actually, with the same amount of basically, we know that the Fed has not tapered their bond purchases at this point in time. So if they have not tapered and then all of a sudden there's upward movement on this chart for the first time in over a year, that tells us that actual money, not Federal Reserve money, is coming into the market. So we still have the same amount of Federal Reserve purchases this whole entire time, and now all of a sudden there's actually other people buying bonds as well. So that tells us that essentially bonds are like a flight to safety. That's where old money goes when things are overpriced, overvalued, or there's you know, basically like indecision, or you could say that you're even scared in the markets. So people will go to like US Treasuries because that's like the safest place to be when everything else is looking risky. So we essentially have this downtrend taking place. We have multiple red histograms on the monthly, and now here we're showing the first sign of life, one green histogram at the bottom here, but we are still well below the slope line, and it looks like at this point in time it's getting ready to flip over red, which tells me once we're underneath that slope line, once we've lost that blue slope line, eventually we stay under it long enough, it switches over red, and then we actually start the bearish trend. So when this starts flipping over here and we start losing it, we're going into like a downtrend, consolidation, whatever. But once this is red here and once this flips over red, we're in like a full-on like bearish trend market that will last for like months and sometimes even years. So we can look at a previous time when that took place and kind of get a better idea. So here we are at the top of the range back in 2012, and then obviously we saw multiple red histograms. Once we crossed under the slope line, it flipped over red, at which point in time, you know, it did a very similar thing. We basically had a shoulder, neckline, head, neckline, shoulder, and then we broke down from it to the bottom of the range, and we'll see that same signature here. We got the hard sell, we left the bullish control zone, we had multiple red histograms in a row, we eventually lost the slope line, it flipped over red here, and then the red continued here, we went under the zero line, and that continued on for some time, back down to the bottom of the range. In this case, we came down just below the 89 exponential moving average. In this case, we've already tested the 89 exponential moving average, so I think it's more likely than not going to be a test of the 200 exponential and simple, and also the bottom of the channel. So that's what I'm basing this on. The monthly chart, if we go a little shorter time frame on the weekly, we'll see obviously what was taking place here at the bottom of the range. Exactly when we were talking about it, we were finding support on the heart line of the channel. We were finding support on the 200 simple moving average. We got the hard buy signal leaving the bearish control zone. We had multiple green histograms in a row. We then crossed over the slope line, even though it's still angled red. We entered the bullish control zone here, and now here you'll see, we have basically so far been putting in a bearish candle on the weekly here. So this is our print from last week. This is obviously like a doji, like a shooting star, which is a rejection candle and often represents the top of a trend or like a rejection of higher prices. We'll see a similar candle right here as well, at which point in time we had quite a bit of downtrend afterwards. So, that's telling me quite a few things in line. Not to mention, obviously, we got rejected at the 55 exponential and 89 exponential moving averages as well. So, again, a bunch of things lining up, telling us that more likely than not, we will be correct on this technical analysis based on history and repeatability. And then finally, if we go down to the daily as well, we'll notice we were inside the bullish control zone, had a short pullback here inside the bullish control zone, and now we're losing strength again. We were in a powerful uptrend this entire time here on the daily, and now here we are running into the 200 exponential and simple moving averages. We were rejected by the 200 simple moving average, came back down to test the 200 exponential, and then if this area does not hold, again, we would expect this to start looking bearish here, and we'll see this is starting to roll over as well. So all the different time frames are basically agreeing on this, that we have probably topped out this trend, at least for now. So, and again, that is the 20-year Treasury bond, not the yields. The first chart was the yields on the 10-year. The second chart is the actual bonds for the 20-year. So, and then let's switch over and we'll take a look at the dollar next. So here we have the DXY first. Again, let's go to our long term. And we know obviously that with the DXY, with the dollar index, that if this is in an uptrend, it's going to put pressure on assets and then also foreign currencies or foreign markets in relation to the dollar. This is just a basket of 6 currencies, but it's primarily like the euro, the pound, and Canadian dollar. And then there's a couple other like smaller ones in there as well, so much less significant. But here we have the monthly chart on the dollar. Let's turn on our moving averages and have a look at what's going on here. So what we have basically going back here is, again, back to the 1980s. We're in an overall downtrend. We have a high, a low, a lower high, a lower low, and now here we are inside. This is an internal retracement of the previous move. We're in the middle of the range right here, but now we'll notice something very important happen. Here's our 200 exponential and simple moving average in a very clear downtrend. They're both sloped to the downside, and then here, once price action was able to move on top of them, we started to gain a positive slope to the upside. So for the first time on this chart, the 200 exponential moving average has an upward slope, and now the 200 simple moving average has an upward slope as well. So again, we're on the monthly, so anything can still happen. There's 18 days left in this month, technically 19, but we'll notice something very important is taking place as well. After a long bearish downtrend, the whole time this red slope line on the TJD TDMACD was red, again, long downtrend slope line here, at which point in time we came inside of the bearish control zone, finally got the hard buy signal, and then we ended up going into a long upward trend. There were a couple little blips of the slope line flipping back over red here, but overall we'll see predominantly the blue slope line throughout this period on the monthly. That trend lasted from 2006 up until 2017, so that was over a decade of uptrending price action. And now after that decade, inside of what was essentially a bear market on monthly, because we were under the 200 exponential and simple moving average and they were angled to the downside, after that almost 11 years to the upside, now we broke through those levels and we have found support on top of the 200 exponential and simple and shifted them open. So if we can now get, after 2 green histograms in a row, this histogram comes back up here, crosses over the slope line, flips the slope over blue, we would expect this to last roughly another decade. And once again, just for another point of reference, the previous time when that took place was in 1991, and it stayed blue essentially until 2001. So once again, we'll notice a 10-year period in strengthening dollar. So we had a 10-year strengthening dollar here. We've had 10-year strengthening dollar here, and now we're potentially looking at another 10 years of strengthening dollar if this level holds, so 10 or more. So we'll have to see how that plays out, but we'll notice also once again at the beginning of that trend, we had the hard buy signal coming out of this area. We had the hard buy signal coming out of this area, and then here we have inside the bearish control zone about to get the hard buy signal coming out of that same area as well. So it's still a little early to say that anything is a guarantee. Obviously anything could happen, but as far as I'm concerned, I expect the dollar to strengthen at least for the next few years. Anything can happen in a 10-year period, but everything we're looking at on the monthly time frame tells us that the dollar will be gaining strength. And then also if we let's switch over to our weekly next. Switching back over to the weekly, we also had some, I didn't speak about it specifically this time, but we did have bullish divergence between the 2 points here on the monthly, telling us also that we're going to get a powerful move back up. And now we've put in essentially what looks like a W bottoming pattern here, or potentially you could say that that's a left shoulder, head, neckline, right shoulder, and now here we are retesting that neckline as well, which is like sort of a sloped inverted head and shoulders, but now we would expect a powerful move back to the upside. Now we do have quite a few moving averages above our head here on the weekly, so it's going to be difficult to chop through the zone, but once again, we have now flipped over on the weekly after triple bullish divergence at the bottom of a range. We have found support, we've moved back up, and we're at resistance right now, just trying to punch through it. It's going to take some time. I do expect us to go like sideways here and have some volatility in this range, but with triple bullish divergence, we now have all the green histograms to the upside. We are now above the slope line. We have flipped it over blue on the weekly, and we've gotten the hard buy signal coming out of the bearish control zone. We have the 821 cross to the upside. So again, while we're going to need to get through these moving averages above our heads, everything on the weekly on the dollar is telling us that this will be strengthening in relation to the basket of currencies. So, and then also, and I know this is all like contrarian to like what everyone else is talking about, but if you pay attention to what everybody was saying a couple months ago, you pay attention to what everyone's saying now, and then you pay attention to what everybody's going to be saying a couple months from now, you will notice that I have been speaking about all this from months ago, talking about the long-term picture and how the dollar would strengthen well into the future, despite what everyone else thought. And then you'll notice that people are slowly but surely coming around, and you're starting to hear important talking heads and economists and technical analysts saying the same thing as well. So that's why it's so important to keep track, to keep your eye out on the big picture, but also what's happening in the short term. So you can make money in the overall trend to the upside, make sure that you're positioned well, and trading with the trend rather than trying to like swim upstream all the time. So. And then here on the daily, once again, we'll notice we have broken through the 200 simple moving average. We have broken through the 200 exponential moving average. We came back down, retested them. The previous time we broke through them, we came back down. We failed to hold them as support and continued back down. That's where we put in our double bottom. And then we came up this time, found support on the 200 simple, and then got back above the 200 exponential. And now we're looking to find support on the 200 exponential. Next target to the upside, 93. After that, 93.7. And then eventually we'll have to chop through this difficult range right here, but I expect us to get up to like 94.7 and then 96. And there's a bunch of different levels along the way. But most importantly, we do expect some consolidation. We are getting the hard sell signal, leaving the bullish control zone, and we do have multiple red histograms in a row. So I would expect us to go sideways to down here on the short term. So. And then just to get a little different of a picture, we can look at the USD to CAD. Now this is going to take out all the other currencies and just look at the dollar compared to the Canadian dollar. And we can see here a little different of a picture, but overall it's telling us the same thing. The dollar has broken back up. It has not gotten above the 200 exponential and simple moving average in this case on the daily. So that tells you that the Canadian dollar in relation to the other currencies in this basket is a little bit stronger. But overall, we're getting the same picture. The 821 have crossed to the upside. We have a bunch of green histograms in a row. We have blue slope line. We made it inside the bullish control zone. We're now consolidating, trying to continue to the upside. But I do expect like sideways to potentially downward movement. So I'm not going to go into like extreme detail on this one. This is overall going to tell us the same thing. All right, so Welcome to everyone also. If you're new to the stream, welcome. If you are a veteran of the stream, obviously welcome also. Let's take a look now at our cryptocurrencies, and then we'll look at our traditional markets. It is no secret overall that right now I'm having difficulty finding value in much of any of these assets across the board. I have found that overall everything does not look so hot. There are a couple charts out there that still look decent, but for the most part, everything is either in a downtrend, strengthening to the downside, or potentially looking for like a rollover essentially. So they're all in different stages, but I think if we notice, like based on the moving averages, the different time frames, and then also these two main indicators that I like to use as well as the moving averages, we can start to see how some things have already rolled over and the pattern and what it looked like when that was happening compared to the ones that look like they may be rolling over in the near future. So here we have our Bitcoin futures chart. On the daily, we got the 821 cross well back here or here. This was our cross down, our attempt to get back above it, and then failure, at which point in time we sold off over 50%, lost over 50% of our value. We came down and tested the 200 simple moving average and 200 exponential moving average, and then we have basically just been consolidating. Now here we have, for the last few days, been well below the 200 exponential and simple moving average, unable to break back above them. We have lost the slope to the upside on the 200 simple, and the 200 exponential, I'm sorry, the other way around, 200 exponential and the 200 simple is starting to roll over as well. So while we are getting the buy signal right here, we're getting rejected and essentially have not been able to get back above our 21 yellow moving average anytime since we started selling off. So it tells me that although we're consolidating at this range, we're seeing no actual bullishness out of this on the daily. Now, we are seeing a little bit of love here. We have the multiple green histograms in a row. We've gotten above the slope line here, but we have not flipped it back over blue yet. If we can flip the slope line back over blue on futures, which is something that's already taken place on traditional markets or on like spot markets, I do expect a move back to the upside somewhere around like that $39,000 to $40,000 range. I do not think that will be sustained at this time though. That can easily change over time, but we got to take it as it comes. So here on the weekly, we can see a little bit clearer of a picture. The 8 and 21 cross to the upside back here at about $8,000 in April of 2020. And from that point in time, the red 8 stayed above the yellow 21 this entire bull market up. So we got that hint on the daily that we were topping out based on quite a few things. Bearish divergence. We got the jewel thief hard sell signal of bearish divergence, which is a sell, buy, sell inside the bullish control zone. So the back area is lit up red, and then we get a sell signal, a buy signal at the top of the range, and then a sell signal. That's our divergence signal. We also had on the daily bearish divergence from like these three drives. So we're able to basically call the top perfectly, at which point in time we expected a bounce, and then the 821 crossed the downside on the daily, and we took another sell as well and got out basically between 64,000 and 55,000 at three different areas. Once we left the bullish control zone here after getting the hard sell signal, that was telling us that we were going into a powerful downtrend on the weekly. We then got, after that capitulation move, the 821 cross to the downside. Again, now it looks extremely bearish on the weekly. And then now here we had multiple red histograms in a row. Once we got two red histograms in a row, that told us that we were getting ready to leave. That gave us the sign ahead of time before the capitulation dump. We wanted out of these markets. Once a red histogram sold off below the slope line, eventually we lost the slope line, and now the slope line is red and angled to the downside. We are below the zero line. We are inside of the bearish control zone, and the 821 had crossed to the downside. So while we're finding temporary support on our 50 exponential in bright green and the 55 exponential in bright green and 50 simple moving average in like the darker green here, we are basically just doing what we said. We dropped the bouncing ball. It bounces high the first time, less high the second time, and then eventually it rolls over to the side of the table, and we expect the ball to fall off the table. So the next target to the downside is going to be the 89. There's no more moving average in between there. So when we get to the purple 89 moving average at 26,700, I would expect a wick to maybe poke down below it, but eventually us to find some kind of support down there. At this point in time on the weekly, there's no sign of the bulls. There's no life from the bulls. So while we're seeing a little bit of potential on the daily chart, the weekly futures chart looks extremely, extremely bearish. And now if we zoom out here on the monthly, it's very hard to get a big picture on this because it's only been around for a couple of years. But we did exit the bullish control zone, the red highlighted area back here. We did get the hard sell signal. We did break down from the 8 moving average here. So we have the 21 still below us at around that same $26,000, $27,000 range. But we do now have 3 red histograms in a row. So again, telling us that we are entering into a monthly long-term downtrend. Now it's important to know that during that downtrend, we have the parabolic SAR here. When we sold off here and put in that first bearish parabolic SAR, we never were able to break back above it. Once we did, we entered back into a bullish uptrend. So here, once we flipped it over 2 months ago, now we would not expect price to get back over 64,000 without obviously going into an extremely powerful uptrend. So while it is still possible, I think that it's more likely than not based on what we're seeing in these charts that Bitcoin has topped out for this cycle, this 4-year cycle, based on like happening events and Bitcoin's code. So now here on the Bitcoin chart, this is our spot markets on the daily Bitstamp. So we'll see a little bit different of a picture, and the reason we do get a little different of a picture is because this is open on the weekends, as where the futures chart is only open during like regular trading hours, Monday through Friday. So here we have lost the exponential moving average. We have lost the simple 200 moving average, and we are almost rolled back over to the downside. Now, what I'm seeing here is we tried to cross the 821 back to the upside once here, and it failed. And now here we are in between the 8 and 21, trying to get above this 21. If we can close above the 21 and then open and close above the 21 again, I think we could easily make it back up to that $40,000 range. We'd run into some trouble, obviously, at 35.6 and 37.4. But I think it's more realistic than not that we could get up to like 40 or even as high as like 45,000 without too much difficulty, if and only if we can get a close, an open, and then another close. So we want to see one whole candle open and close above the 21 moving average at like 34.5. We are getting now a sell signal right here, but we did cross multiple green histograms, crossed above the slope line, flipped it over blue, and we're approaching the 0 line right here. So we are starting to see a little bit of life from Bitcoin on our spot market chart here on the daily. So I think that there's definitely some room here for a scalp to the upside. I am currently in a couple of long positions on Bitcoin and some other altcoins. But again, I'm not overly bullish, and we are trading against the trend. At this point in time, the weekly and monthly and also the daily are all in a downtrend. So any moves that I'm making, any positions I'm taking right now are literally short-term scalp positions from anywhere from a couple of days to a couple of weeks or potentially a month. But at this point in time, everything on crypto is pointed to the downside. So now here, if we go to the weekly chart, we will notice once again, this one is a little less clear than our futures chart, but we had a cross back here at like $4,000. The 821 crossed here. We then had a little bit of chop through this area, and then once again on the weekly we had a cross back here in May at about $8,000, and then from that point in time the 8 was above the 21 and we were angled powerfully to the upside. We then went into obviously a massive move to the upside, and then once again here we broke down and the 821 crossed to the downside. Now on the weekly entered into a bearish downtrend. Again, we got the sell buy sell signal, left the bullish control zone. We had 2 red histograms in a row at the top of the range. Once that happened, we broke down from the slope line, and now here we have flipped the slope over red. We are inside the bearish control zone, and as far as I'm concerned, the bulls are essentially dead. Now, that's on the weekly. So again, that does not invalidate potential for a short-term move to retest some of these moving averages. But at this point in time, we're talking about trading, basically a range of 8 to 20% to the upside, potentially as high as 34% to the upside. But I do not expect us to get above that level. And if we do get back above that level, which we'll notice was clear support here, and then obviously resistance through this range, I would expect it to act as resistance again. And again, any trades to the upside right now are trading against the overall predominant trend. So people can argue as much as they want that Bitcoin is still bullish. We're still in a bull trend, but according to actual technical analysis, according to everything I use and most people that trade markets that have experience and like a defined trading method, Bitcoin is very much in a bear market. And then if we go over to our monthly chart here, once again, we can get a little bit better of a picture. Let's look at a crypto of Bitcoin and then we can sort of get a bigger view here. On our monthly chart here, we will notice that we only have essentially going back the 8, the 21, the 50, 55, and then the 89. We have not, it has not existed long enough to populate the 200 exponential or simple moving averages. But this is our 4-year cycle. Let's look at that real quick. So essentially, this is the top of the first 4-year cycle in Bitcoin's life. This is the bottom of Bitcoin's 4-year cycle in its life. This is the top of its 4-year cycle in its life. This is the bottom. And then again, you know, based on those moves, this is time cycle analysis. So these are the exact distance apart. So once we have 2 points, we can then predict where the third point would be. And then again, once we have 2 points for the bottom, we could predict where the third point would be. That would give us essentially a top that should come in around December of 2021. Will that happen? We only have 2 data points in the past, but based on those 2 data points, that's what we would expect. Will it happen? I don't know. I mean, there's probability, there's possibility, but at this point in time, it looks less likely. It looks very unlikely that we would find support here and then put in a new all-time high before then. But it is 100% possible, and if it does happen, I expect it to happen somewhere around mid-August to get a powerful move to the upside and begin like a multi-month bull trend to put in new all-time highs. Now, after that, we can predict out as far as our bottoms go, and we can see that Bitcoin is telling us that in November of 2022, we are likely to put in the bottom for our next 4-year cycle. So that's again based on the previous 2 4-year cycles we had. Only have 3 data points, but using those. So, and then we can also look at what our moving averages were telling us based on that, and we'll notice that the 821 cross to the downside on the monthly right here, the red cross below the yellow at the absolute bottom of the first bear market in 2015. That was the absolute bottom when they crossed to the downside. And then we'll notice here again, when the 821 crossed to the downside, that was once again the absolute bottom in December of 2018. So now if we look at something else, turn back on our little tool here, we'll notice that the blue line, the time cycle bottom right here, was exactly at the 821 cross. The blue line right here was exactly at the 821 cross. So based on these 2 data points as well, we would expect the same thing to happen again. So at some point in time, we would expect this to sell down, regardless of if it puts in a new all-time high or not. We would expect this to eventually sell back down and then eventually have our bottom right around then with the 821 crossing to the downside at the same amount of time. Now, if that's going to happen, if we're going to see the same thing that happened previously, we need to pay attention to a couple things that look different here. Here, we never closed the monthly below the 8 moving average, and we continued to the upside, and then we sold off after we topped out. Here, we never closed below the 8 until we went into the bear market and then sold off. Here, we have already closed below the 8. 1 month and now potentially a second month as well. So we're definitely doing something different. Is it still possible to make new all-time highs this cycle? Yes, it is. Is it likely? I think it's less likely. We have at least a mixed signal or some fog telling us that. Now let's look down at our indicators and see what they're telling us as well. So we topped out here. You can see we had a very violent knife stab to the upside here at our top. Here we had a much less violent knife stab at the top, and then here we had one much earlier in the cycle here. So that's not giving us reliable, useful data as far as I'm concerned based on those 3 data points. Next we have the bearish control zone and our Stoch cross 821, or I'm sorry, the Stokes crossing with the hard buy signal coming out of the bear market. That was obviously a reliable signal, as that was right around when the 8 and 21 crossed back to the upside and we went into a powerful uptrend. We had the hard sell signal at the top of the range coming out of the bullish control zone, and that predicted our top very clearly. And then again, we had coming out of the bearish control zone a hard buy signal on the monthly. That was at the 821 cross right here, at which point in time we never crossed back to the downside, went into a very powerful uptrend. We had a false signal, sell and buy right here. We call those a false signal because we did not ever enter the bullish control zone or the bearish control zone, and we got that signal. It was basically a flip and then a flip back to the upside right away. That was just a little bit of weakness based on, the CVD scare back here, which is, black swan event. It's not unrealistic to think that our momentum indicator oscillators would give us a false signal. At which point in time we went into our second our third bull market in Bitcoin's cycle, at which point in time we basically left the bullish control zone and now we've gotten the hard sell signal on the monthly. Is it possible that we still flip this back over and invalidate this signal? Yes, but we have sold off very powerfully, so it's very unlikely that that would happen at this point in time. But if we did just all of a sudden shoot back up to like 60,000, it's a possibility. We'll notice though that this signal was perfectly reliable on the way down, potentially reliable on the way down here, perfectly reliable on the way up, perfectly reliable on the way up. So we have essentially 1, 2, 3, and then potentially this would be our fourth data point that tells us exactly what the overall trend is going to be for years to come. So now let's take a look at the TJD TDMACD. We'll notice that we're in a very powerful uptrend, and then multiple red histograms in a row, we went into a bear market. Very powerful uptrend, multiple red histograms in a row, we went into a bear market. Started back into a powerful uptrend, and then multiple red histograms in a row. That was essentially like the indecision or like mini bear market that we went into with the CVD dump. And then again, multiple green histograms in a row, very powerful uptrend. So now we have multiple red histograms in a row at what looks like it's going to be a peak based on the severity of the angle. This was more of like a rolling top right here. This was somewhere in between a rolling top and like a jagged top. And now this is essentially a very powerful, very, very strong peak. So again, based on this, on the monthly, based on everything, we have more things telling us that Bitcoin has already topped out than has not. But we do still have a couple things telling us there's potential. We have essentially our time cycle analysis telling us that we could potentially still put in an all-time high based on 2 data points in the past. But that is basically it as far as I'm concerned on this chart. So what I expect to happen here based on our previous cycles, every other time when we came back down, once we eventually touched the 21, we could not sustain price back above the 8. Here we came down, once we touched the 21, we could not even get above the 8. So here, our next move to the downside, I would expect for us to touch the 21, which is around $27,000. And then at that point in time, I think it would be very hard for us to get over like $37,000 to $40,000. So I think more likely than not, we will end up trading inside of a range of roughly like 50%. Now, does that mean that we can buy the bottom and sell the top of that range? Pretty reliable? I think so. I mean, there's definitely money to be made trading a 50% range. The volatility is still there, especially on a monthly chart. So there's definitely still some serious potential. I'm not ready to like give up on trading it overall, but it's very clear to me that we're at least in a consolidation, if not bear market. We do have a couple other points that we could pay attention to here. You'll see these diagonal lines I've drawn in. The first one, the blue right here, is basically from the top of our bull market to the bottom of our bear market. And then we touched it in our little CVD dump. So we have a bottom top point and then a bottom point. And then again here we have a bottom point from the bear market back here to the next little mini bear market, and then potentially would expect to find support on top of that. So we can see how that line has acted as support all through this range, support through this range, and then resistance through this range. So if we get down to it again, I would expect to act as support. But if we break down from it, it's going to look really bad, at which point in time our next diagonal line would potentially come into play, where we could come back down and find support somewhere on that blue line. Now that's obviously going to be a very violent move, and we do not want to see that happen. There's one more thing I want to talk about on this chart while we have it up here that's very, very important, because it could be a change in something that's never happened before. Here is the top of our bull market right there. From that top point, let's just put one for each of these bull markets. So this, and then we'll change them to a different color just so it's a little more clear. So we'll make those yellow just so we can kind of have something to talk about. So this is the top of our bull market in 2013, and then our bear market sold off here, and then we came back up, put in a new all-time high and topped here. And then we'll notice that when we came back down, we did not come down as low as the previous top. So we did not come back down and retest that top. And then this time when we broke through here, we came up and broke to new all-time highs, obviously. The first time we retested essentially the close on the monthly, came through. What we do not want to see is, we do not want to see this price action sell back down and break below that 20,000 point, because that would be doing something that Bitcoin has never done before. So if that takes place, that's where we really need to be alarmed. If we break down to or below $20,000, that tells us something substantial has changed in the overall trend of Bitcoin, and we really need to be worried about what could potentially happen here. So based on our actual Fibonacci's, based on everything we've talked about today, there's quite a bit telling us that essentially Bitcoin is very clearly in a long-term bear market at this time. It doesn't mean there's no hope left, but there is very little hope left. Let's put it that way, for Bitcoin to make a new all-time high. But again, doesn't mean there's no hope left, but it's getting worse by the day. Let's say that. And then Bitcoin on the daily, just looking at some of our momentum oscillators. I'm not going to go into price action on this chart. We'll just pay attention to the indicator oscillators. We are basically, let's look at the on balance volume first. We have essentially come back down, retested, and sold below on balance volume. We have come back down, and we're essentially at it. If we break down below it, we'll start eventually flipping it over to red, and that's going to show us that there's more net selling taking place than buying. And then here on the waddah explosion, we'll see there's two factors on this. There's the slope of the line in the background. If it's yellow, it means that the strength of the trend is going down, it's waning. If it's blue, it means the strength of the trend is going up, it's strengthening. And then the color in the background is also significant. If it's green in the background, it means it's a bullish trend. If it's red in the background, it means it's a bearish trend. So on the way up here, we had a bullish trend, and it was strengthening because it was green in the background and blue slope line. And then here we'll see it was waning. It was yellow and there was orange in the background, and then again blue in the back, or blue slope and green in the background. And then eventually we flipped over to where now we're seeing red and orange in the background and a blue slope, which means we're strengthening to the downside. And then when the green was showing up in the background, it was just a yellow slope, which meant it was more of a consolidation. But overall, the predominant trend is clearly to the downside. Now here we're starting to see quite a bit of green here, but we're not really seeing it pick up strength. So if this starts picking up strength on the daily and the slope line flips over blue and we start to see more volume coming in, that could potentially tell us that the trend is switching back over to bullish on the daily. But as of now, it is not. We also have some bullish divergence that took place on the daily on the Fisher Transform. So we'll notice that we put in a low around this point here. We then put in another low that was lower around this point here. We then put in another low that was lower around this point here, and we got a powerful move back to the upside. That was essentially triple bullish divergence playing out. And then if we look at it on a broader scale, and we look at this initial peak right here to the downside, and then we look at the next peak here to the downside, we have a low and then a lower low. We have a low and then a higher low here. So again, now we're putting in a potential for bullish divergence again. So we'll have to see how that plays out. It's a little more clear on the longer time frames though. So now that we've looked at the shorter time frames though, we can now look at these indicators and see a more clear picture as to what's taking place on the overall trend on longer time frames. So again, with the Fisher Transform, we'll see that we peaked out through the bull market in green, and then the bear market consolidation was all red, and then we peaked out in our little mini bull market here, and then the bear market consolidation, little baby bump up here, and then the CVD sell-off, and then we entered into a nice strong bull market. We saw some bearish divergence take place between this initial top and this one here, at which point in time we sold off. And now here we are in a very powerful downtrend. It's all red below the zero line. Definitely very bearish, but we're towards the bottom of the range on the weekly. So we could potentially get a reflex rally, a nice powerful move back to the upside to a lower high. And that would not be unrealistic. And then again on the waddah explosion, we'll notice we got a bunch of powerful green here. There's a blue slope line right there. And then, oh, you might not be able to see this because it's behind the little picture of the CPU. But at which point in time, we then went into a long bear market. It strengthened here, sold off, and bottomed out. And then we saw a little peak in volume here, a little push to the upside. It went sideways for quite some time. And then a bunch of green volume through here, blue slope line. And then now you look here at the top, we lost that slope. It turned yellow here, and this is one more time when I was just saying, hey, something's not right here. We're losing volume, we're losing the slope, and then all of a sudden, obviously, that was our top. So now we went into a yellow slope line, so we weren't bearish yet, but we were selling off, and then we see a bunch of orange and red volume here, started to see the first blue slope line here, and now we have a blue slope line, so it's strengthening. The slope is strengthening to the downside at this point in time. So even though we're essentially going sideways here, there's more selling taking place than buying based on volume, based on price. And then also on the on-balance volume, we'll notice that, let's pull this back up so we can see how it corresponds with price action. All through here, bullish and green, consolidation period, we start to see signs of red. And then here at the bottom, it's nice and red. And then again, nice little push up all through green here, and then some red. And then through here, through the bottom, it starts flipping back over. And then again, all green. And now here we have sold back down below it. We found resistance at that level and seen our first sign of red. This is our first little bit of red right here. So we need to be very careful, because if this starts flipping back over red or switching between red and green, it tells us there's more net selling taking place than buying. So that's clearly what's happening at this point in time. All right, and then let's just go to our monthly time frame, and we can see once again very clear peaks here, bearish divergence, and then the sell-off, bottoming through this area in red, and then again peak through here, bearish divergence takes place from these two peaks. And when I say bearish divergence, we have a high here, then a higher high. We have a high here, then a lower high. We have a high here, then a higher high. We have a high here, then a lower high. So that is bearish. It's telling us that the energy on the indicator or oscillator or momentum is not lining up with the actual price action on the chart, and telling us that it's unsustainable and a reversal is likely to occur in the near future. Here we have only one peak, but we have sold off violently. Is it possible we get a move like this where we put in a new all-time high, but with less momentum? It's 100% possible, and that would correspond with us getting basically a nice August pump, new all-time highs before the end of the year, and then putting in divergence and staying on our like 4-year time cycle. But we do have to watch, because on the monthly, we are very clearly in a downtrend. Even though we have not flipped this over red yet, the slope is very powerfully moving to the downside. And then also on the waddah explosion, we see a big peak here. That was our top. A big peak here. That was our top. We have a blue slope line in the background here. And then once it flips over yellow, we do not put in another all-time high after that. Here we have a very powerful blue peak here, and we have flipped over yellow. So I would not expect us to put in another all-time high. Again, based on the indicator oscillators, not my hopes and my feelings. This is all technical analysis. This is not fundamental analysis. I'm not talking about random countries adopting cryptos or Michael Saylor. You know, this is actual technical analysis based. It's not my feelings. My heart is not involved in what I'm talking about right now. So here again on the on balance volume, you will notice very powerful uptrend, green slope line, flips over to red through the bear market. Very powerful uptrend, green slope line, flips over to red through the bear market. So we are still technically in a powerful uptrend, but we're losing strength. What we do not want to see is the cross take place and then take us into that bear market. So we're still well a ways away on the unbalanced volume, and there is still a possibility that, again, we still see further price action to the upside, but it looks less and less likely that we would be breaking out to new all-time highs anytime soon. So that is it for Bitcoin. I'm going to take a quick drink. If anybody has any questions, feel free to post them in the chat. Say hi, tell me where you're from, where you're at, or just that I know you're listening. All right, let's keep it moving. Making good time. Oh, apparently people are not happy that I took a 10-second water break. All right, Ethereum is next. Let's take a look at our Ethereum chart. Ethereum here, again on the daily. We crossed the 821 back here before that capitulation dump. Could not get back above it. Now we did cross it back up to the upside here, but immediately failed. Excuse me, and we're back below it now. We are still above 200 exponential and simple moving average, but we're getting a hard sell signal. Sort of a mixed signal though. We've been in a bearish downtrend on the daily for some time, and now we've crossed the histogram back above the slope line and flipped the slope line back over blue. So while we can consolidate here above the 200 exponential and simple moving average, there's definitely potential for a move back up on Ethereum to like 2400 or potentially as high as like 2800 in the short term. If we go over to the weekly on Ethereum, we have still maintained the 821 cross. We'll notice here the 821 cross to the upside back in April last year at $176, at which point in time we were long on Ethereum. Actually, I was long before that, but you know, that's the best time to go long when you're getting confirmation. We then ran all the way up to over $4,500 or around $4,500, and now here we are below the 8. We're below the 21 on the weekly, and we're getting very close to having that cross to the downside. If we sell off from there, we would expect Ethereum to go down to like 1545 based on the weekly. We also got the divergence signal, sell by sell, left the bullish control zone, and very powerfully angled to the downside. We are almost to the bearish control zone, and this area would turn green in the background, but typically we can try to find some support around there. We do have multiple red histograms in a row. We have sold off below our slope line. While it's still blue, this tells us that we are very close to entering into a long-term weekly downtrend on Ethereum, but it is currently stronger than Bitcoin and damn near every other crypto. At least majors. There's still some shitcoins that are doing well. Ethereum on the monthly, we can notice here once again, once we cross that parabolic SAR, flipped over red right here, and we see all these dots take place, we went into a, basically from March of 2018 until February of 2020, so almost 2-year downtrend. And now here we have 2 red parabolic SARs right here. So are we getting ready to go into a 2-year downtrend and preparing to lose from the top to the bottom, tip to tip? 93.98% of our value? I don't know, but there's definitely some warning signs here. We did also get our hard sell signal, left the bullish control zone, we didn't actually have this populated yet on the monthly on Bitstamp, just because there wasn't a chart back then. But this was around when we would have got our cross at the absolute top. This is around when we're getting our cross at the absolute top. Multiple red histograms in a row before the bear market. We have 1 red histogram so far. Very close to putting in a second one. Again, this is a monthly though, so we still have 20 days to try and save this. Maybe flip it back over green, or maybe have next month's be green and buy us some time. But you'll notice here that once that flips over, we do go into a long, powerful bear market. If Ethereum lost 93% of its value from right now, it would be roughly... And again, this does not have to happen, but, what would $200 Ethereum look like to you in your portfolio? So even if you don't believe it, even if you don't believe in technical analysis or Jesus or unicorns or Santa Claus, it's definitely worth paying attention to, just in case. Let's look at our Ethereum to Bitcoin chart. This is the relationship between Ethereum and Bitcoin, and then we can actually look at the crypto cap, which is going to give us, Bitcoin dominance rather, which is going to give us Bitcoin compared to the entire market. So here we have Ethereum to Bitcoin. Let's look at this on the monthly. Ethereum to Bitcoin on the monthly. Some powerful things took place here. Some very clear things took place here. We have put in a top back in 2017. Then we put in a lower high, and then that was acting as resistance. We also had another resistance start showing up here in purple. Once we broke through the purple resistance, we immediately tested the red resistance, consolidated at it, and broke through it. That told us that Ethereum was going up faster than Bitcoin was going up, even though they were both in a bull trend. We'll notice also that we left the bearish control zone and got the hard buy signal, and then we had multiple green histograms for the first time right around that time when we were breaking out, at which point in time Ethereum went in a powerful uptrend. So from the top here to the bottom here, we retraced 61.8% of the move. So here, Ethereum was the strongest it's ever been and the most valuable it's ever been compared to Bitcoin. Here, it was at its lowest in the entire cycle. And then here, we're at the 618, which means it's 61.8% as valuable compared to Bitcoin as it was at its all-time high. Typically, these Fibonacci levels will act as resistance. So you'll notice we ran into resistance at the 382, finally broke through it. Ran into resistance at the 618, but broke through it. So now I would expect us to come down to the 0.5, which would give us like basically a 0.05 Bitcoin to Ethereum ratio. So essentially it would be 1/20th. So if Bitcoin is at $20,000, that would be Ethereum at $1,000. If Bitcoin was at $40,000, that would be Ethereum at $2,000. So that's the range we're at right now, and around where I would expect to act as support in the short term. Let's go to the weekly now. We can see on the weekly, obviously, what took place. We entered into, bearish control zone, hard buy signal, and then Ethereum gained, from the bottom to the top, it gained 400% compared to Bitcoin. And then here, we had the similar situation take place, a much less powerful move, but Ethereum gained 69% compared to Bitcoin. And then here, we had that buy take place here, and from then, we had Ethereum gain 400% compared to Bitcoin once again. And then again, we can look at the sells the same way. We had the hard sell signal right here. And then from that sell signal to our next buy signal, Ethereum lost 85% of its value compared to Bitcoin. And then the next sell signal we had take place was here, where Ethereum lost 43% of its value compared to Bitcoin. And now here we have gotten the hard sell signal, leaving the bullish control zone. So what do we expect to happen? Potentially something around 40% of Ethereum's value in comparison to Bitcoin lost. Whether we come down to the 0.5 at 37% value lost, or we come down to the 0.382 at 52%, or somewhere in between at some of these other resistance support areas in like the 45% range, we're definitely seeing a clear trend take place. We had obviously flipped the slope over blue right here and went parabolic, flipped the slope over red and went parabolic to the downside, flipped the slope over blue here, went parabolic on that move, flipped the slope back over red and went into a prolonged downtrend for years, and then again flipped the slope over blue here and went absolutely parabolic from the bottom to the top. Ethereum gained from its low to its high 400% compared to Bitcoin. And now here what's happening, we have multiple red histograms in a row. We're getting ready to test that slope line. If we break down from it, we could expect to potentially lose a massive amount of Ethereum's value in relation to Bitcoin. But you can argue this time's different. You can tell me about devs. You can tell me Vitalik Buterin is a robot. You can tell me about the protocols. You can tell me about all the things that are being built on top of Ethereum. But I would have to argue that I'm using technical analysis and none of this has to do with my feelings or my heart. So it is what it is. I'm telling you what we're seeing here, and I'm giving you actual factual proof of what we're seeing and what potentially could and is likely to happen in the future. So if you don't like it, I'm sorry. I don't mean to hurt your feelings. All right, so now here on the shorter time frames, let's take a look at the daily on Ethereum and see what's happening compared to Bitcoin. We obviously have left the bullish control zone here, had a violent sell-off to the bottom of our channel, which did not exist at the time. We then came back up here, got the hard buy signal, came back inside the bullish control zone, again, topped out. So now we have 2 points of reference at the top here, and then 1 at the bottom, at which point in time we sold off violently, came down inside of the bearish control zone, and put in basically a second point of reference on the bottom. So now we have 2 on top and 2 on bottom. I know it's not drawn perfectly. You could argue that it should be drawn like this. I would agree with you. There's definitely a possibility it could be drawn like that. But based on my experience with crypto specifically and what's going on here, I think it's more likely that this was a little bit of an overshoot and this was a little bit of an undershoot, and that this is actually our point right here. But in time, if we come back down to the bottom of the range, there's definitely a possibility for the other argument as well. So we can go ahead and just put in a support line down here at the bottom, and then we will have both reference points to pay attention to when price action does come down to it. That may correspond, depending when we get there, with the heart line as well. We'll have to see. But again, you know, I'm biased based on what I've seen happen over and over again in the charts. So, and we'll notice here once again that we have a very powerful slope line through here. We then lost the slope line and now it's red. And now we're selling off to the downside powerfully. So is that going to be a similar situation like this right here, where it lasts for only a few months? Or is it going to be a similar situation like this, where we chop around but essentially lose, you know, massive percentage of Ethereum's value? We'll have to wait and see. But this chart is very bearish right now and looks extremely toppy. It looks like we basically went above the 618, came back down below it, and then found some support, but couldn't put in a new high, couldn't get more market cap compared to Bitcoin, and then broke down from it. And now we're retesting a lower high. So we have a high, a low, we have a lower high, a lower low, and now we have a lower high again. So what would I expect to happen? I would expect us to put in a lower low. So whether the lower low comes in around that 0.054 range, or whether it comes in around that 0.05 range, we'll have to wait and see. But again, this is a very powerful downtrend. Once we got the hard sell signal back here and left the bullish control zone, we sold off quite a bit down to the support. So here we've done the same thing again. I would expect us to sell off quite a bit down to support again. Which one of these 3 areas is going to be support? We'll have to wait and see. So yeah, that's it. Let's look at, you know what? Let's skip over actually, and let's look at our Bitcoin dominance chart and get a better picture as to what's going on, because we can sort of reference that. This is very similar. The Bitcoin dominance chart is very similar to Bitcoin to Ethereum ratio, because this is showing us the entire market cap of crypto compared to Bitcoin, as where the other one is showing us Ethereum compared to Bitcoin. So again, obviously Bitcoin was 100% of the market cap back in the day because it was the only crypto, and then a bunch of shitcoins came out and it went absolutely parabolic to the downside, went all the way down to 35% of the market cap. at which point in time it bottomed out and the shitcoins got absolutely hammered on the way back up. Many of them died. Projects were, deleted from existence. Scams emerged left and right. No one went to jail though because it's crypto. But we did cross the 821 back to the upside, and then here to the downside, back to the upside, and then it failed, and then we sold off and went back down to the downside. So we were in a very clear downtrend. We have a high, we have a low, then we had lower high through here, and now here we potentially have a higher low. Now, is this going to potentially sell back off? If we go into a rally and crypto puts in new highs, I would expect this to roll back over to the downside and put in a new low as like all the shitcoins take off and gain market cap. Is that likely to happen? I don't know. We'll have to wait and see. We could very easily get something like this. Could very easily get a powerful move back to the upside, lose a ton of market cap in altcoins, and then come back down and put in a new low. It's still definitely possible. We have lost the slope line on the monthly. It's flipped over red for the first time just because this only goes back till whatever. I mean, the first altcoins were not even made until, 2014-ish. So we don't have a ton of time on this chart. The monthly is not particularly useful, but you can see how the 50 simple and the 55 exponential were very important, as were the 821 crosses. So now if we switch over to the weekly, which is where this chart is the most useful, we can see very clearly that what happened, we sold off very powerfully to the downside, retested the 200 exponential and simple moving average, retested them one more time, and then we put in a higher low potentially. We are now at the 8 moving average, trying to move back to the upside. We're leaving the bearish control zone. We've gotten the hard sell signal. We have multiple green histograms in a row. Let's look at the last time that happened. Back here, we left the bearish control zone, got the hard buy signal, put in a retest, and then powerful move to the upside afterwards. Flip the slope back over blue. Is it possible we're in more of a situation like this, where we try to get back up and then it fails and we put in a new low? Yes, that's situation number one. Situation number two is that we're more in a situation like this where we're going to put in a higher low after that and then continue to the upside. But whether we go to the downside first or whether we go straight to the upside is still up in the air. But either way, it eventually has Bitcoin regaining some of the market cap as we go into our bear market. Based on Bitcoin's 4-year cycle, we would expect the altcoins to act accordingly. Now, some will obviously sell off worse than others. Some will obviously do better than others in bull markets. But this chart gives us the overall relationship to Bitcoin and cryptos. So here we have essentially a deciding point. If we push back to the upside, I would expect Bitcoin to gain another 10% market cap up to 50. Well, a 10% move. It's at 46 now, up to 50. And then after that, potentially as high as like 55. That would absolutely devastate many of these altcoins. But we'll have to wait and see. And then if we switch over to the daily, I don't really like using this on the daily. It's more of a weekly chart. But you'll see here we have crossed the 821 to the upside, came back down, retested it, and now we crossed it back to the upside again. So it looks very likely that Bitcoin will be back at 47 and then 52 and then 55 before long. So in my opinion, Bitcoin is going to be gaining market cap in comparison to altcoins. So what are the 2 ways that that can happen, or 3 ways that that can happen? Bitcoin can go up while shitcoins go sideways, or up less. Bitcoin can go sideways while shitcoins go down, or Bitcoin can go down while shitcoins go down way faster. So that's our 3 scenarios and how they would play out. So now let's look at our weekly total crypto cap. This is the total value of all Bitcoin and all cryptos and all shitcoins, all added up together. So we'll see when this 821 crossed back here, we were at $218 billion in market cap, roughly. And that was in April of 2020. So there was roughly $200 billion worth of value in crypto. And then we topped out here at the high at 2.5 trillion. So overall, basically did like a 1.25x, 12x on the value of crypto overall. At which point in time we topped out here. And now we have officially confirmed the weekly cross to the downside between the 8 and 21. So we are now at 1.38 trillion. So what do I expect to happen? Are we magically just going to rally back up and go to new all-time highs for crypto market cap? Yeah, I doubt it. This trend lasted for, over about a year and a half worth of uptrend. So is it possible that we're now going to go into like a multi-month or multi-year downtrend? Well, last time it happened, when we got the cross back here, we pushed back up one more time and tried to cross it back to the upside. And then we basically went into our bear market from March of 2018 until we cross back to the upside in April of 2019. So are we now going into a 1-year crypto bear market? Probably. Could we easily get another powerful pushback to the upside like this, where we potentially cross back up and potentially add? Keep in mind, this move right here was from the bottom to the top. We added 96%. So crypto's market cap doubled in value. So is it possible that we sell off here, back down potentially to 900,000 or 900 billion, and then double back to 1.8 trillion? Yeah, it's definitely possible we end up back up there. But after that, or before that, or it never happens, we go into a 1-year bear market based on technical analysis, not my heart, not my feelings. So let's see. Okay. Doggy coin is next. Doge is got the 821 cross back here at 45 cents. And has been crossed to the downside since then. Barely hanging on to the 200 exponential and simple on the daily, but it is showing some life here as we have crossed above the slope line, multiple green histograms, and it has turned blue. So on the daily, seeing some definite potential for a move back up to like 30 cents short term. We're seeing on the weekly, we crossed to the upside back here at 2/10 of 1 penny. 2/10 of 1 penny. And now here we are at 21 cents, getting ready to cross back to the downside. So if we use this very simple technique of buying the 821 cross and selling the 821 cross, we would still be up 8,251%. So without using any hopes or dreams or fundamentals, because obviously Dogecoin is a total piece of shit and has no good fundamentals or technicals to it, we can see that we can use this chart to make quite a bit of money regardless of how we feel about a shitcoin or project, etc. We did get the sell buy sell signal at the top of the range, multiple red histograms in a row. So now we are seeing some very clear signs that Dogecoin is done and will likely go very, very low. Monthly chart's not really useful. Still above the 8. There's nothing else populated, so. Dogecoin is actually, on the longer time frames, one of the stronger cryptos still because it had such a powerful move to the upside. But overall, short term, it looks very weak. XRP is barely hanging on to this key support level right here. If it breaks down from the support level, it's definitely going to be in trouble. But it did cross multiple green histograms and blue slope line. It is getting the hard sell signal, but still below 200 exponential and simple moving average, still below the 8 moving average. It's going to need to try to get back above the 821. This sold off when it crossed the 821 to the downside back here at $1.42. It has now lost over 50% of its value. Now you can see why I use these specific techniques over and over again. They serve a very good purpose, and without using your bias of how much you love XRP or Ripple or what kind of Kool-Aid you like, whichever cult you decide to join, you'll notice that these indicator oscillators work extremely well, and they are all available for free. If you have not downloaded them already, I highly recommend that you go to TradingView, and you do. And if you need to find out what they're called or how to find them, you can look down in the description of this video and every other video. You can also have free access to my actual TradingView chart as well. And yeah, and if you're interested in further knowledge, learning, or you want to just be able to interact with me, ask real-time questions, or be part of our trading group, highly recommend that as well. Do everything from teaching people how to trade, how to do technical analysis, how to use specific indicators, oscillators, technical analysis on specific charts, my opinion on what's happening, but obviously not financial advice because it's not financial advisor. I'm not a financial advisor, but basically you can be part of that trading group as well. If you would like to find out how, feel free to reach out to me. XRP on the weekly does not look great. Bunch of red histograms in a row. It has lost the slope line. It has officially flipped over red here, and we have the 821 cross to the downside. XRP looks really rough. The last time this happened, it did get a little move back up, but before it got that move back up, it sold off pretty violently afterwards. And one of the worst things that we're seeing from XRP is this was our previous cycle high. XRP failed to make a new cycle high this bull market, which is basically worst case scenario. If it does not make a all-time high before the end of the year, before Bitcoin goes into its bear market officially, it's essentially what I consider to be a dead heartbeat, a dead asset, because it constantly has more money leaving than entering. So very, very bad if that takes place. Very, very bad. Probably means the project is done. But let's be real. Fundamentally, we can throw in a little fundamentals here. You know, it's pretty obvious now that XRP is not going to be taking over SWIFT, and that central banks will just create their own digital currency or cryptocurrencies. Uniswap is next. Uniswap on the daily has gotten the 821 cross back to the upside, which is good. It's still below the 200 exponential and simple moving average, but it is showing some strength. Although these Stochs look like they're getting ready to cross back to the downside, we have multiple green histograms in a row and blue slope line here. So again, this one is looking like a potential move to the upside on the daily. But when we switch over to the weekly, it's very clear that any moves to the upside will be trading against the predominant trend, as we have gotten the 821 cross back here and are still well below our moving averages. We have left the bullish control zone and gotten the cross to the downside. All red histograms. Once again, extremely weak, but definitely some potential for a short-term uptrend, short-term bounce at least. Chainlink on the daily, well below the 200 exponential and simple moving average. We got the 821 cross on Chainlink back here at $42. It is now at $18, still well below the 8, well below the 21, and well below the 200 exponential and simple moving averages in blue. We are about to get the cross to the downside on the stochastics, barely hanging on to the 528, which is the last of our moving averages. If we break down from this area, Chainlink is going to be in big trouble. But we are seeing some green histograms. We have flipped the slope line back over blue on the daily. There's definitely potential for a move back to the upside to retest the 200 exponential and simple moving averages. Again, if we switch over to the weekly though, very bad picture. We've got the 821 cross to the downside here, confirmed. You know, you could argue that back here was when the 821 crossed to the upside at 36 cents. It had a couple close crosses along the way, but never actually did. So if you bought at 36 cents and you sold when it crossed back to the downside here, you made 7,837%. So that's a pretty reliable way to trade, I think. But again, not financial advice. Once the red histogram showed up, we got sell by sell at the top of the range. You know, that's our divergence signal taking place. We're now inside the bearish control zone. We now have only red histograms. We have crossed the slope line back over red. This looks bad, but obviously not nearly as bad as XRP, because it did put in a new high and was one of the strongest cryptos in this bull market. Next we have Polkadot. Polkadot ran into some resistance at this key level. We're not going to talk about that little guy right there. But basically, top back out at that same area. Got the 821 cross to the downside. It had some little weakness consolidation through here and had some false alarm crosses. But then once it got the actual cross, it was unable to get back above the 821, crossing back to the upside. It has now flipped over the parabolic SAR green again for the first time since May of 2021. So that is a good sign. We do have multiple green histograms and blue slope line here. We did get the hard buy signal coming out of the bearish control zone. There's definitely some potential for Polkadot to get back up into like the $22 to $25 range. But again, if we switch over to our weekly time frame, we will notice on the weekly the 821 has crossed to the downside. We tried to reclaim that level, bounced back up to it, failed, and then sold off from then. We were putting in lower lows on our weekly closes. We are inside the bearish control zone. There are no green histograms, no signs of life from the bulls, and we got the hard sell signal at the top of the range. This looks extremely bad. Extremely bad. Like all crypto, with the exception of like a handful of the multiple thousands of cryptos. BNB, one of the strongest cryptos throughout this entire bull run, and fundamentally argue that it's definitely one of the most useful cryptos as it has an actual functioning purpose. BNB, Binance Coin, 821 cross back here. Now it's getting that cross back to the upside right here. So potentially on the daily, entering into at least a short-term uptrend, still above the 200 exponential and simple moving averages. Hard buy signal, and the Stochs are angled powerfully to the upside. Multiple green histograms and blue slope line. BNB definitely looks like it's getting ready to make a push to the upside. Is that push going to take us up as high as $431? I'm not sure, but it sure looks good. There's definitely some possibility here. Now, if we are going to go ahead and put a target in place here, which I do like this setup, we would essentially want to potentially take a, let's take a look at this, 34% potential move to the upside with an 8% stop loss roughly. Well, let's say 10% just to give it a little space. If we broke down from the 200 exponential simple and started closing back below them, we would want to be out of this trade as the 821 cross would be invalidated. But if we continue to the upside here, we would have a potential move of 35% profit with a 10% risk. So essentially, if we took this trade on 3 different assets, same trade setups 3 times, and we flipped a coin to see if they were successful, and half the time they were, half the time they weren't, on our trade successes, we would make 35%. On our trade failures, we would lose 10%. So we could essentially take this trade like over 3 times and would only need one of them to succeed. So we could take the same setup 3 times in a row, and we would have a very high probability of making money, which is how you should be trading, in my opinion. How I like to trade intelligently. But we do have to be very careful, because if we look at the weekly, we're getting a different picture. We are still well below our moving averages, the 8 and 21. They have not crossed to the downside yet, so we're still seeing some strength. But we did get the hard sell signal, leaving the bullish control zone, and we have only red histograms, and we are below the slope line as well. So any moves to the upside are likely to be faded, and selling is more likely than not going to take over. But do like this trade setup. Do not take this trade setup. This is for me. It's a hypothetical situation. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. And CZ Binance is probably not the best person, like morally speaking, but does have a very nice business. ADA Cardano, Charles Hoskinson's little baby, on the daily. This one is crossed to the downside, 821, still well above the 200 exponential and simple moving average. Did get the hard sell signal, is seeing only red histograms, and has not flipped the slope line over blue yet. While this is strong above the 200 exponential moving averages, it is weak on pretty much every other aspect. It's holding on to a key support level. We do not want to see this level break. If we do, this thing's going to be in big trouble. If we switch over to the weekly, it is still above the 21, still above that support level, but cannot get above the 8. So if this stays here long enough, we expect for it to break to the downside. Next support level coming in around like 78 cents. So, gosh, that could get rough. Hard sell signal, leaving the bullish controlled zone. Stokes are angled powerfully to the downside. All red histograms at the slope line now. If it breaks below this, that's our second signal, which it's about to. And then the third signal, obviously, would be the slope itself flipping over red. Does not look good, but still stronger than most cryptos. All right, so that's it for our cryptos today. Now here's our crypto-related assets. Here we have Coinbase. Coinbase was obviously from its direct listing inside of this channel. We took our trade position right here based off our Fibonacci extensions. Our first portion of the trade was the break out of this range, came back down, retested, at which point in time you could actually get a better entry than what I took. And then once we broke above and confirmed the 821 cross to the upside, we strengthened that trade on a retest. So now we have essentially our initial entry was at 228, and then the second entry was at 241. So we basically have like around a $235 entry on this, like averaged out on our positions. But the 821 has crossed to the upside. We got the hard buy signal. We broke out of a channel. We have all green histograms on the daily. So as far as I'm concerned, this looks good. We're running into some trouble here at the 55 exponential, but next target to the upside is $273. Then the 0.5 after that at $298. Then the 618 at $325, at which point in time, I think it's more likely than not where we're going to top out, at least short term. But in the meantime, we are going to make that money for free. So somewhere around in that range is where I expect this to get tired and run out of steam, at least on the short term. I will be taking profits along the way at key levels, and then potentially adding to my position if it strengthens, or, you know, cutting my losses if it looks like it's going to roll over. So, or I guess cutting my wins, really. Riot Blockchain is next. Riot had a measure move potential breakout from this channel here. Lost the 821 cross, got it right here, and now it's losing it. I specifically spoke about this one. Coinbase I like because it's not necessarily correlated to crypto, but it's related to crypto. So they make their money off of fees from people trading, from buying and selling. So they still make money if Bitcoin's going up or down, or crypto's going up or down, as where Riot Blockchain is based on, you know, it's a mining company. So it's directly correlated with Bitcoin price. So this is not going to go up if Bitcoin goes down, in my opinion. So I'm much less likely or much less apt to take this trade. We did put a small position, you know, trade setup here with 35% to the upside, about 10% to the downside, like 3-to-1 risk reward ratio. Did not take this trade though. We also broke down from a key level, and then we had the moving average crosses. We are above the blue slope line, but we did get the sell by sell signal, which typically we got back up to the 0.5, and this is a very clear resistance that Riot was having trouble getting above, which is exactly where it topped out as well. So at this point in time, I think it's more likely than not going to see further downside. But the trade setup is still there, still active if anyone took it, but I don't like it. But again, I take the easy trades. I don't like, I can't say I don't like working hard, but I don't like working hard on trades. MicroStrategy, again, we have a trade setup in play here. I did not take this trade. I do not like Sailor or MicroStrategy, but I believe the trade setup was this right here. Not sure why it's not on here. So it was a 41% potential to the upside with 10% stop loss. Again, I did not take this trade, nor am I interested in it. I did get the hard sell signal, but held support at the breakout of the channel. It is multiple green histograms. Although we're seeing some red here, still blue slope line. There's definitely potential for this still to go back to the upside. There's definitely potential to still take this trade if you liked it but hadn't taken it already, or I liked it but hadn't taken it already. But again, I'm not interested in it. Just it's not my bag, baby. GME, so we're just into like meme stocks now, which are great. GME, a little GameStop action. We can see here on the daily, you know, last time we got basically bearish control zone, hard buy signal, put in a massive move to the upside, bearish control zone, hard buy signal. We have exited the bearish control zone. Is it possible we're about to get a parabolic move up to the upside to new all-time highs? Definitely is possible. Is it probable? I honestly don't know. It's a meme stock, so it can do whatever it wants. All red histograms, red slope line now on the daily. Does not look good. 821 has crossed to the downside, barely hanging on to the 89 moving average. Next target to the downside would be $131. Let's look at our weekly. Weekly, if you took the position at $4.32 when the 821 crossed to the upside, could have made, based on just the 821 moving average crosses, 4,278% on the weekly. So definitely some potential for gains there. Yep. Above all the moving averages, except for now, it has touched the 21. If it hangs out here long enough, these two are going to cross to the downside, and I would expect it to move down to about $113. We are seeing only red histograms on the weekly. About to get the cross back to the downside on the weekly. Still have a blue slope line. I would be real careful in these meme stocks at this point in time. They were not meant for buying and holding. The whole holding the line thing, in my opinion, on a short squeeze is not a good idea. A short squeeze should be like something quick and easy money, and then you get out after the squeeze is done. I don't think GameStop is fundamentally or technically a good company. But I'm biased because I've actually been to GameStop before and understand that its time is over. AMC, so yep, we got that exact move I spoke about. Called AMC down to the high 30s. I believe the very next candle or the two candles after that took it down to the high 30s. It did see a powerful move back to the upside, but now on the daily, again, let's look at how the 821 cross moves work right here. 821 cross to the upside, and then, you know, at this point in time, 398% if you were to sell out now at the potential 821 cross to the downside, which is going to happen this week. I'm sorry, it's going to happen probably tomorrow when the markets open if we don't suddenly shoot up to over $50, at which point in time I will probably take some short positions on this, as I think people are really going to start capitulating because there's very little support along the way on the way up here, and there are some serious targets to the downside if this thing just starts to get wrecked. We did get the sell by sell signal at the top of the range. We now have the 821 cross to the downside on the daily. We have only red histograms. We are below the slope line. It has not turned red yet, but it's very close to. So, you know, like I said, I'll probably be selling some calls or buying some puts in the very near future on AMC, and we will see how the gorillas diamond hands or monkey diamond hands or ape poop slingers or whatever, we'll see how strong they are when they start losing all their money, and I take it from them. If you like AMC, this is not meant to hurt your feelings. I'm just going on technicals, which obviously work. Here we are on the weekly, still in a powerful uptrend, still above the 8 moving average. First sign of weakness here, as we do have a red histogram. Last time it just consolidated for you know, a few weeks and then continue to the upside, which is again a possibility. But I would be very careful, as short squeezes are intended for temporary moves. My next target to the upside is the 1.382, $110. After that, it is $155, and then final target to the upside is $222. Do I think AMC gets there? Nope, but it's possible. And it's better to be wrong and still make money than it is to be right and make no money. Because I don't care if I am right or wrong as long as I make money. Because that is why I trade and invest. Bed Bath & Beyond. We have been speaking about this specific pattern. There are two patterns taking place right now. We have a bearish descending triangle in red right here. And then we have a bullish flag pattern, essentially, right here in green. They obviously overlap. We have bounced the bottom of both patterns here, touched the top of both patterns here, and then we have hit the flag at the bottom here, tried to come back to the top, hit the flag again, and we're technically right at support or below it. If we break down from here, our target will be $23.60. If we break up from here, our target could be as high as $40. So definitely a very tradable range through here. But again, fundamentally not great, technically mediocre at best. It is above our 200 exponential and simple moving average, but again, after this powerful move, has still not put in a new all-time high. So it's essentially like, this is like your XRP situation, where you have a high, then you have a low, then you have a lower high, and a ton of resistance above your head, ton of selling above your head, and we are very clearly below the slope line here. Doesn't look good. We did get the hard buy signal. There's definitely some potential to chop around here and put in a new high, but again, do you really want to bet on a losing company because it's a meme? I don't. DraftKings on the daily, below 200 exponential and simple moving averages. They're rolling over to the downside. This thing looks like it's getting ready to go into a long-term bear market. We do still have a blue slope line here on the TJD TDMACD, but it actually looks very bad. You do not want to see the 200 exponential and simple rolling over. We got the 821 cross to the downside. This thing is very clearly in a bear market on the weekly time frame. I don't know why anyone would be taking a long position on this when it looks very clearly like it's getting ready to break down from the 50-55 moving averages. DraftKings next target to the downside long term is around $36.50 to like $35.50. We have a red slope line on the TJD TDMACD. We have barely any green showing up on the histogram, but we are potentially going to get a cross on the weekly here to the upside. So there is some potential to come up here and still put in a lower high, at which point in time I would be concerned that we may be putting in like a head and shoulders type pattern. But again, we'll have to wait and see. All right, knocking through quite a few assets already. Hey, what's going on, our kids? Good to see you over there, my man. Actual and factual, you know how I roll. All right, let's go to our indexes. It is no secret that I'm having some difficulty finding pretty much anything that looks good on longer time frames, especially. Let's start on our longer time frames, and I'll work our way back. On the monthly here, we're breaking out of a long-term trend to the upside. We typically top out around this area here. The previous time we got the hard sell signal, we had a long consolidation sell-off. Then we had, once again, the CVD dump right here, and now here we are, potentially getting ready to do the same thing. It's not unlikely, though, that we would see a potential push to the upside to new all-time highs and a break of this range on the monthly. I don't think that this just has to top out right now. I think it's much more likely that we see a throwover situation. But the fact of the matter is, on many of these time frames, on many of these assets, especially indexes, we are seeing a lot of warning signs. I'm not going to sit here and call the top and say we're going to zero tomorrow, but look, we're very close to a top on these things. I know people don't want to hear it, but it is true. Hard sell signal out of the bullish control zone here. You know, basically rejection, bearish divergence between these 2 points, bearish divergence between these 2 points, bearish divergence between these 2 points, and then we saw this is on the weekly, 19% sell-off, so that's definitely worth paying attention to. Here we saw a similar type situation here, multiple red histograms, break down, and then we saw that massive sell-off at our resistance here, okay? And now here we are at the top of the range again, consolidating at a resistance line, and now we have essentially sell, buy, sell signal, the same sell, buy, sell we got here. If we exit the bullish control zone, which we already did here, we would expect a powerful move to the downside. all red histograms on the weekly. We have now crossed below the slope line, and the slope line is still blue for now, but we are seeing a very clear potential that the Dow Jones Industrial Average is topping out on the weekly. Very clear. Very, very clear signal. Daily, we are seeing quite a bit of divergence. We have one drive of divergence here. We have a high, then we have a higher high, same high, higher high. Here we have a high, lower high, and then potential for another lower high. Red slope line inside the bullish control zone though. So we're getting some mixed signals, but some very clear bearish divergence, which typically leads to a violent sell-off and powerful dump. But again, what do I know? I'm sure markets will just go up forever because Federal Reserve, don't fight the Fed. S&P. So we've been operating inside this channel since 2009. So, you know, good little like 12 years inside this channel. We are now at the top of the channel again. We sold off when we got to the top of the channel here. Sold off when we got to the top of the channel here. Cruised along the top of the channel here and then sold off. And then didn't get to the top of the channel. Didn't get to the top of the channel and sold off to the bottom of the channel. And now here we are at the top of the channel again. So do I still think we get up to like the $460 to $470 range? Definitely still a possibility. Definitely still my target. But we have to be very careful because here we are on the monthly up at 97.0 roughly. And the last couple times when we sold off from 96.7. We sold off from 95.9. We sold off from 94.8. We sold off from 94.4. We sold off from 96.1. We sold off from 97.7. And here we are at 97 roughly. So I would say that the likelihood of us continuing on the monthly at this point in time, we are, based on previous experience and what's happening, we are probably within a month of the top of this market. But again, I'm not trying to call absolute tops. I'm just saying we are very, very close to at least a consolidation, small sell-off, if not a capitulation dump. S&P on the weekly. Again, we have to be very careful as we're seeing sell, buy, sell. Now we have buy again. So we're hanging on to the levels here, but we're putting in divergence between our different points here at the top of the range, barely holding on to support here in blue. And then again, we have a bunch of red histograms in a row, followed by like 2 green histograms, but we are finding support. But the likelihood of us putting in bearish divergence is very likely at this point. I think there's a high probability we see a powerful move up here, like another. Again, I think the throw over is probably in the cards, another 10+% up here. And I think we're very close to the top on these markets, very close. But not ready to be completely out of them yet. But I think being in the indexes right now is not the best idea. I would much rather be picking good stocks than just everything. Again, we've seen some statistics recently that over 50% of the stocks inside of these indexes are non-profitable, and they're not non-profit companies. They're profit companies that are not making profits. So if your job is to make money and you're not making any money, and the last 2 times we had over 50% of the index non-profitable companies, we had a capitulation dump. I'd say there's probably a high likelihood of that happening. IXIC, NASDAQ at new all-time highs again, sold off, bounced pretty powerfully to the upside, sell signal on the daily, and we were showing a little weakness, but this thing has been going through a long consolidation period. If anything should be making new all-time highs now, it's probably tech, at least in the short term, as this would be correlated to the rates dropping. So as long as the rates on the 10-year are going down, I would expect tech to keep going up, as it has like the highest ratio. So we'll see though. But again, very clear bearish divergence taking place. We have a high here, then we have the same high here, then we have a higher high here, we have a high here, then we have a lower high here, then we have a potential lower high here. It is possible we continue up here, but we have lost the slope line here. It is red now, and we're back inside the bullish control zone, and we're seeing green histograms. So we're getting some mixed signals on the weekly, and this one definitely looks less bearish than some of the others. But again, we have got the buy at the top of the range in the bullish control zone. Here we got the buy at the top of the range in the bullish control zone, and then we put in a parabolic push up and then immediately capitulated down. Here we did the same thing, push up and then immediately capitulated down. The 2 previous monthly dumps that we got from those levels were 23% and 32%. So is it possible we go up another 10% and then down 30 after that? I think it's very possible and very likely. We need to be careful, but we are seeing only green histograms and blue slope line on the monthly. So the NASDAQ is actually looking better than most other indexes, not surprisingly. Russell on the daily. Yeah, it's basically just going sideways, doing nothing. Let's look at our longer time frames. Here we are at the monthly, going sideways. Oh, excuse me. Bearish control zone. I'm sorry. Bullish control zone, bearish engulfing candle at the top of the range. All green histograms. Blue slope line. Still looks good on the monthly, except for that bearish engulfing candle. On the weekly, we're getting the hard buy signal after leaving the bullish control zone and basically just going sideways. We have all red histograms, almost all red histograms, and we're below the slope line. It's still blue for now. This thing looks like it's getting ready to roll over. When it does, 1700 looks more likely than not to me. Yep. And then let's look at some sector. Yeah, let's just look at all the sectors. I might cut today's video a little bit short. My voice is still hurting from the UFC fights. As I was pretty excited when Conor snapped his leg in half and the entire bar was like booing for Dustin Poirier. But obviously I bet on DP. XLB, so we have our material sector. Getting the hard buy signal coming out of the bearish control zone, bunch of green histograms, putting in lower highs, still below the 821, finding some support on the 89. Let's just do long term on all these. We'll do the monthly and the weekly. So we're in the bullish control zone, all green histograms, blue slope, bearish engulfing candle. So mixed signals at the top of the range. On the weekly, we left the bullish control zone, hard sell signal, bunch of red histograms, still have a blue slope line, but we're below it. This looks like it's done. It looks like it's done. This is how most charts look right now, and this is what has me really skeptical in these markets. So that's our material sector. Then we have our communication sector, which is XLC. Let's look at the monthly again. The monthly still looks good. All green, bullish control zone, parabolic. And then let's look at our weekly. Again, above all the moving averages. Crazy amount of mixed signals here at the top of the range, but still creeping higher. But we can see we are putting in divergence. We have basically a high, then a lower high, then a lower high again. And then here we have a high, then a higher high, then a higher high again. So could this keep just floating up? Yes, certainly could. But we're seeing massive amounts of weekly divergence on this. This is one of the better looking charts. Communication. XLE is energy. Energy, we're going to skip over here. On the weekly, we will see, let's get rid of our drawing tools. On the weekly, we will see we're getting quite a few red histograms, still above the slope line. We have left the bullish control zone. We still have not gotten the hard sell signal yet, but it looks like we're getting ready to. After that bearish engulfing candle, we got basically like a bullish engulfing candle, but just put in a lower high. We're getting rejected at the 200 exponential and simple moving averages here. If we consolidate long enough, we could easily push to the upside. 821 have just crossed to the upside. Bunch of green histograms and blue flipped over here. You know what? This is probably one of the best charts that we have. Now, granted, it's still below the 200 exponential and simple moving average on the monthly. But we have gotten the 821 cross here, which is very big deal. Very big deal. So, while I don't think right now is the best opportunity to enter into this, I think that this long term, let's look at the last time we got the cross. When we got the cross back here was in November of 2018. And then it lost 67% of its value. So now here we're getting the cross to the upside here, and it bottomed out in March of 2020. So a year and a half to the downside. So I think it's not unrealistic to think that this thing from when we got the cross to the upside could easily go up for like 1 to 5 years from now. But the real question is, do you want to wait and try to get a better entry somewhere closer to like 48 bucks, or is 52 good? Because this thing doesn't move a ton, which is why I actually really, I don't want to sell myself on this, but it's why I'm actually really liking this is because the downside potential on this is much less than the upside potential. So while we have an open trade currently, I was essentially looking for a retest of this area to enter into another trade, and we got the perfect retest. Now, do we consolidate here and then get a move to the upside? I'm not sure, but honestly, I see like the potential for downside here as low as like $46. So if we're at 54 now, what are we going to lose? 20% of our value? And then what's like the potential target back to the upside? I mean, if we look at our Fibonacci extension targets, you know, basically back to previous all-time highs, back to the 786 or the 886. I mean, we're talking pretty good risk reward ratios. 45% to the upside with 11 or 12% to the downside. Now, that would be a tighter stop loss here, but essentially it wouldn't really be a stop loss as much as just a trade setup, and you would just quote unquote buy the dip or dollar cost average. But you'd be dollar cost averaging on a pullback into something that's on a monthly and weekly uptrend for the first time in basically like multiple years. So I actually really like this. Again, I think we'll get a better entry into this though, because we are getting the 821 cross to the downside here, but we're above the 200 exponential and simple moving average, and we're not that far off on price. So I think I'm going to look for this to carve out a bottom somewhere between where we're at now and basically like $48 and take entries. Yeah, I actually really like this one. Yeah. XLE, Energy, the underperformer of a lifetime, finally looking good. Okay, so XLF is next. This is our financial sector, showing some weakness here on the daily. Fundamentally, one of the worst, I think, like looking long out. I would much rather buy into something like PayPal or Square, I think, than banks right now, to tell you the truth, for a long-term perspective. But we're getting the multiple divergence signals, sell, buy, sell, buy, sell, leaving the bullish control zone at the top of the range on the weekly. We do have the slope on the 200 exponential and simple to the upside here, but we have all red histograms. We're still above our blue slope line here on the TJD TDMACD, but it looks like we're getting ready to lose that. Next target to the downside would be like $32, another 10% down, at which point in time I might pay attention to this, but I really just don't have any interest in getting stuck in something like this. Again, support at about $30, another 20% down. On the monthly, it looks decent, but I'm good. No, thank you. Next, XLI, industrial sector. Again, I'm very bullish on this the long term, but right now is not the best time in my opinion. We are saving that 821 cross to the downside. We're seeing some green histograms. Still have a red slope line, but we did get the hard buy signal coming out of the bearish control zone. It is possible this is carving out a bottom right here, but I think more likely than not we see lows before we see new highs. But we are very close to the top of our channel now, which, you know, we have touched quite a few times in the past. We've broken out of the bottom of the channel twice, including the CVD dump. I think that at this point in time, the risk to reward ratio is not good. We're looking at basically, you know, 10 to 15% to the upside, and then we're looking at essentially like 16% to the heart line or 37% to the bottom of the channel. So I would rather try to buy this at like the 200 exponential simple moving averages down here. Again, on the weekly, we're getting the divergence signal, left the bullish control zone, all red histograms on the weekly. This thing looks like it's getting ready to roll over, and I think it's more likely than not going down to like $90 before it goes to like 120. But we could see another push up here to the upside. It looks good on the monthly. Definitely at extremely elevated levels though. But I'd say XLE and XLI definitely look the best sector-wise right now so far. We'll see in a second though. Technology looks extremely good. It's at extremely elevated levels on the daily, but looking at the weekly, I mean, the chart looks phenomenal. Where it looks like we're about to get the cross back above the slope line here and save it. We could get rejected here like we did last time. We have to wait and see, but it looks like we're getting ready to cross back to the upside at all-time highs, and potentially we're just like refueling in this range. Extremely bullish on the monthly. Extremely bullish. I mean, if you were just looking for a momentum trade, XLK is probably it. Technology. But I mean, that's no secret. Let's be real. Investing in tech would be a good idea. Gee, really, you think? XLP. This is our consumer supply index here. Again, we're crossing that 821 back to the upside here, getting the hard buy, coming out of the bearish control zone. All green histograms, still below the slope line, but this thing's showing some strength on the daily. Weekly, consumer staples, getting the hard sell signal, leaving the bullish control zone, in between the 821, all red histograms below the slope line. I do not like this on the weekly. It looks like it has further downside. And then on the monthly, still looks good. But the problem with all these charts right now is the monthly still looks good. The dailies look like they could go either way, but the weeklies are saying we're about to enter into a long or midterm downtrend. So real estate looks great, all-time highs, hard buy signal, multiple green histograms, still below the slope line, but last time we crossed it straight back up and put in new all-time highs. Weekly, new all-time highs, hard sell signal in the bullish control zone, putting in some divergence here. If this crosses back up and gives us the buy signal, we're just going to end up with a sell, buy, sell, leave the bullish control zone. But before that takes place, how much higher are we going to go? I mean, there's definitely some potential here. You know, especially with everything going on with the Fed. The 1.236 is our first target at 47.37. The 1.382 at 51. 1.5 at 54.50 and 1.618 at 57.87. So what kind of potential are we seeing here? You know, basically some potential up to like 25%. So let's see about putting in. I've been having trouble finding some decent trade setups. So maybe we'll take a couple, like, I don't even know. I guess you could say more risky. I mean, that's still a decent setup right there, honestly. I mean, I would say probably more conservative wise. This is a little sketch right here. I wouldn't want to have less than the 8% stop loss because I would want to see this level hold right here. It held right here as resistance and then it held right here as support. That would have been the ideal time to get into this, honestly. But realistically, an 8% stop loss with a, 12% to the upside is only 1.5 risk reward. You're really not taking this trade, or I'm really not taking the trade for this, though. I'm really taking it for, like, the next target. I mean, this has got potential, but, there you're at 18 to 8, 2.2 to 1, and then in all reality, this is what you're, typically I expect things to top out at the 1.618. That's like my actual target for a trade setup to play out. In which case we're talking about 26% to the upside and 8% to the downside. So that's like a 3 to 1. But do have to be careful. Because it's getting the hard sell signal. It's at the top of the range. There's just not a lot of room to run. I would rather get a better entry on this. But I don't know if that's actually going to happen. This thing looks extremely strong still. And the real estate, even if we're in a bubble and it's going to pop, the economy could literally go bust and the real estate bubble could keep going for a couple more years. So who knows when the economy is going to run into trouble, let alone real estate. Who knows how long. The Fed might be buying mortgage-backed securities for another 2 years. We'll see. XLU, utilities. This is like a safety trade. You're not going to get rich off this, but it gives you more of an idea of what's going on in the market. If we look at the big picture on this, the weekly, we've just been operating inside this channel since 2009. We had this stab out of the bottom of the channel, obviously danger zone, but here we are towards the bottom of the channel again. If we break out of our small channel here, it's going to take us down to like 61. If we break out of the big channel, it could get absolutely wrecked, but we have an entry here potential for a trade to the upside. Again, I didn't take this trade just because there's nothing to be had here. Even if the big trade is like 6% stop loss with 13% gains. The small trade is 2% stop loss with 10% gains. So it's really not bad by any means, but the percentage is just not there. It just doesn't move the way we want to see it move. Hard sell signal. Bunch of red histograms, losing the slope. Looks like it's going to go back down from here. I suspect it gets rejected right here and comes back down to a low. But we'll see. There might be some potential there. I may have to take some of these less ideal trades that still look good, just because I don't think I made any buys last week. I had a couple small little crypto trades and stuff, and like just not a lot of stuff looks good right now. So maybe I got to be a little less choosy because I'm starting to build up too much capital that needs deployed. So XLV healthcare. This is a strong chart, especially on the daily. We got the green histograms back above the slope line. Looks like it's getting ready to roll back up here. It's at extremely elevated levels though. Everything still looks good on the weekly. Healthcare on the monthly looks great. I mean, it's a momentum trade at this point in time though. You're not going to find any value here, but I mean, stuff like Teladoc and stuff like that though, I mean, might be, I don't know. We'd have to look at a specific chart, but XLV is one of the strongest. I mean, it's like the technology. XRT, retail. Retail does not look great here. All red histograms on the weekly, losing the slope line. Still blue, but we're below it now. Still inside the bullish control zone. Having some serious trouble trying to get above this level. But this did get aggressively bought up last week. The moving averages still look good. I don't know. We'll see. Monthly still looks strong. I'd rather take just about anything else other than retail, though, to tell you the truth. This is a bullish pattern. Very clear ascending triangle. Looks like it's getting ready to bounce the Stochs. Putting in some divergences here, though. I really don't like this. XTN, transportation sector, we have broken down out of a very, very key channel that we've been operating inside of for this last year. Broken down from it after rejection off the heart line multiple times with continuation. So at this point in time, I expect the measure move to play out back down to the 382 or at least to the 236. So I'm expecting a trade setup off of like $75 to like $65. But right now, I don't see anything. I mean, I wouldn't want to see it break down past here, 7%, and then I would want to see it basically come back up to a lower high depending on where it goes. So there's some potential here. Still too early to get any real trade setups in place, but I'm expecting a nice pullback, and then we should be able to do well off of the following. Something similar to this. But again, we still got plenty of time on that. It's definitely got everything pointing to the downside. Daily, you could see a little move to the upside here. Potentially. Weekly looks absolutely horrible. All red histograms. Sell by sell. Leaving the bullish control zone. About to get the 821 cross on the weekly to the downside. Losing the slope line here in the very near future. But again, we could be buying that 200 exponential simple moving average and the 382. That's a beautiful entry down here. Or say it stays strong. Closer to like $74, but transportation is something I definitely have my eye on, but it's going to take some time. We got to wait for it to get there. U.S. oil had a nice little bounce back up here. I do expect it to just put in a lower high though. Sell by sell, top of the range, divergence printing. You know, we're getting as many reds as greens at this point in time, and we're below the blue slope line here. And then everything going on with OPEC right now, you know, I think we'll be able to get a way better buy if we take a buy off like 66, or potentially, you know, depending on what happens with this. Do I think Kathy Wood's right and oil's going to between $3 and $12 a barrel? No, I think that woman is absolutely insane. She's losing her goddamn mind. She's agreeing with me on a lot of things that I've been saying for a while now, which is good, but it's like every time she says something intelligent and starts to like say smart stuff, then she says something like oil's going to like $3 to $12 a barrel, and I just want to smack her across the face for being an idiot, because people actually respect her, and oil is not going to $3 to $12 a barrel. Not for the next 20 something years. Not unless nuclear power all of a sudden takes over everything, or all of a sudden we discover some new kind of energy like cold fusion. So unless she knows about cold fusion, oil is not going to $3 to $12 a barrel in the next freaking 20 years. She is, oh my God, she's so stupid. ICLN, the clean energy ETF, sold back down to like the entry point, broke out of, you know, decent pattern. It's showing a little weakness on the weekly or daily. On the weekly, it's trying to cross the 821 back to the upside, trying to show some strength here and potentially give us this move. But when we switch over to the monthly, you know, we're just barely hanging on to the 8 at this point in time. And if we break down from the 8, we're going to end up down here at like 19, 20 bucks. Maybe as low as, yeah, probably 19, 20 bucks. I can't take this trade right now off a hard sell, bunch of red histograms. It looks like it has further downside, but I will be looking to get into this in the future, just not now. This trade setup's decent maybe for a quick scalp, but I don't love it. But again, you know, you guys know, like I said, I'm having trouble finding great setups at this point in time. So what do we do? Let's do tech next and then commodities. All right. How we doing on time? 2 hours already. Wow. Man, I'm gonna try to rush through these last few. Tesla on the daily starting to show a little life, but not looking great. On the weekly, trying to save that 821 cross, but we closed right at it again. This week is basically do or die for Tesla. We are getting the hard buy signal. We do have multiple green histograms, but this could play out for a long time. Hanging on, but hard sell signal, multiple red histograms. That's 3 months worth of red histograms at this point in time. Tesla looks like it's going down long term. Airbnb. Trade's still playing out. It looks like it's looking sketch though. I'm not gonna lie. Looks decent still on the daily. The weekly just looks like it's getting rejected off the 618, but that's a pretty freaking bullish candle right there. It nails that hammer's looking pretty damn bullish right there. Multiple green histograms, crossing back to the upside here. I think this has upside. It really needs to get above the 8 though. If we can get a close and then open above the 8, above the 618 at like 152, I think we get up here to like 162 quick. But man, this thing is struggling. That was an aggressive sell-off, so we'll see. Bumble, we gotta wait and see what happens with this one. Our trade already played out. I don't like to just re-enter something right away. I mean, you could say we could have entered back here and made another 10%, but this thing just looks like it's going to get rejected and sell off. So we made our money. I'm not touching this for a while. Baidu, man, you know, these are looking like descending triangles. They look decent on the weekly time frame. It looks like it's about to get across to the upside, hard buy and a reaction rally. But when I switch over to the monthly on these Chinese stocks, they look terrible. They look terrible. We're getting the hard sell signal. The last time we got it was just absolute destruction. The time before that, it wasn't bad though. But this is more like what we're coming out of. We have a blue slope line, a bunch of red histograms, and a hard sell. We have the blue slope line, bunch of green histograms, then the red histograms, and the hard sell. This looks like it could just get absolutely destroyed and just come down here and put in a higher low. I mean, this is our last time we got that same signal right here. And I mean, just the immediate sell-off from the top to bottom there was 60%. The time after that, when we had the blue slope line and we got the sell-off, the immediate sell-off was 71%. So if we do it again, are we about to get a 65% sell-off on this? I mean, I hope not, but that would take us down to like 128, which would definitely be a buying opportunity. But I mean, that's our monthly chart. This thing looks bad on the monthly. It's tough. And then Alibaba's the same way. You know, the weekly looks good. Like it's about to get a nice move here. You know, we're definitely seeing some life out of it off the 200 exponential and simple moving average. But then when we switch over to the monthly, same thing. We got rejected at the 821. We're about to cross. We're putting in new monthly lows at this point. If this rallies back up here, maybe something changes. But we just flipped the slope line over red. All red histograms, hard sell on the monthly. I mean, Alibaba looks like it's just about to get destroyed. Not good, man. TME, 10 cent. You know, putting in lower lows. Let's go to a longer time frame. Can't go too long. Ugh, excuse me. Yeah. Broke down from the 618, headed down to the 786, almost made it there. Very bearish candle breakdown here. We didn't even come back up to potentially put in the head and shoulder like I thought. We didn't even get the right shoulder in. All red histograms. We saw 2 green ones and then just capitulation dump. I mean, I don't know where this thing's going to bottom out. Maybe $10. You know, maybe 12. Maybe it already did. But it does not look good. These Chinese stocks look like bad across the board. I mean, we got the hard sell on the weekly back here at 21 and now it's at 12. You know, the monthly we're not going to get much info out of. It's about to get the 821 cross. I mean, it has to rally all the way back up to $16.30 and it's all red histograms, very powerfully angled to the downside. I wonder if this is telling us though. I mean, what do we say about the Chinese markets? Back when we got the CVD scare, China was like a month or two ahead of every other country, including the United States. And what happened with their economy, what happened with their recovery, what happened with everything. So is China giving us a big warning sign? I mean, it might be, guys. Let's look at Diddy and see what's going on here. Let's do a little fib from the top to the bottom. Oh, whoops, wrong. Maybe if I actually use a fib tool, that might help. I mean, it looks like we could come back up the 236 and the 8. I mean, I think it's going to be tough for this thing to find any strength. I think we're more likely to make lows before we make highs. There's a massive gap. Maybe we come back up to 14 bucks, but I mean, man, this thing is probably going to get wrecked. If they're under investigation, it's going to take months for this to all play out. We have almost no data to use. I just don't see any reason to touch this right now. BZ, Kanzen, came back up and closed the gap. That was it was a trade I should have took that I didn't. But I was expecting us to come back up and fill the gap, but not that quick. But we broke down from a key level. This is where Kathy Wood got in back here at 37 bucks. It then sold down to 30, and then bounced all the way back up now. So this is going to be a hard resistance to get above. Very, very hard resistance to get above. There's going to be a lot of selling pressure. Everybody just trying to get out at break even at this point in time. At which point in time I would expect to come back down, and then you want to see this thing come down and put in like a new higher low. But this was our, basically from the high to the low here, that was our 1.382 Fibonacci extension to the downside. So the move back up here, I think we could very easily come back down and touch like the 1.236. And at which point in time, assuming this has bottomed, which we don't know it has, but assuming it has, we can look at some confluence here and see if this sold off at the 0.5, which lines up perfectly with the resistance line, we would expect it to come back down to the 236 or at least the 382. So we could potentially get a trade set up from like 32 bucks or 34.50. Showing some strength here. It looks like the Stochs are about to cross two 4 hours. I was about to say weekly. 2 4-hour green histograms to the upside. We are above the 8 and the 21. But I do expect the best thing this can do is consolidate or have a little retrace and then just build strength for a little while. Neo showing some serious weakness off of that 786. Did not quite get there. Got above the 618. Hit our target. I'm out of this, obviously. Actually, I might have a small position still running. I can't remember. I might have left part of this open, unfortunately. Should have just closed the whole thing. But regardless. Oh, no, wait. I don't even have this position open. That's right. This is the one I missed. Nice. I mean, not nice. I would have rather have got it. But no, I do not have a position in this. Showing a little weakness on the daily, but overall still looks good. The weekly has rolled back over the 821 back to the upside. If this area holds here, I probably will take a position for continuation to the upside. We do have to be careful though. It is a bunch of green histograms. We're still well below the slope line. It's red, but we did get the hard buy signal coming out of the bearish control zone. This thing's got some serious potential to rally here. I'm just a little skeptical right now. After missing that trade, that's what it was too. I wasn't salty, but missed it by like a buck. 60-something%, and I missed it by $1. Peloton looks like it topped out perfectly at the 618 here. I was expecting it to get up a little higher because of like all that resistance up here, but didn't quite get it. Could consolidate here for a little bit and get the move up, but we're getting the hard sell, leaving the bullish control zone. All red histograms on the daily. Weekly, it's crossing the 821 back to the upside. If this area holds here, I think we see continuation to the upside. All green histograms, hard buy signal coming out of the bearish control zone. If this area holds and we get the 821 cross, I will probably take a entry on Peloton, even though I'm not a big fan. Sometimes I gotta look past. Gotta look back at it. Etsy, hard sell signal on the daily, all red histograms. Got a nice pullback, came back up, touched it, topped out exactly at 618. Found support at the top of this channel here. I think there's some serious potential that this thing holds and we get a nice entry. I did miss the entry on this. I didn't have anything in the book, so But again, 821 about to cross back to the upside. If this area holds, I'm going to take the entry on this for our trade setup. Etsy actually looks really good here. Coming out of the bearish control zone, about to get the cross, multiple green histograms in a row. This is probably the trade of the week right here. What is it? 21% to the upside, 8% to the downside, so 3 to 1. 27% to the upside, 8% to the downside, so wait, 2.5 and 3.27 to 1 risk reward. ARKK, we took our profits at the 618, got our first trade setup played out. It rallied a little bit back up here. We'll have to see. Hard sell signal, a bunch of red histograms. Weekly, coming out of the bearish control zone, hard buy signal. If it holds here at the 821 cross, I'll probably re-enter. Multiple green histograms in a row. It could easily have more downside here, though. We got to be real careful. I don't want to get greedy on this one. I thought it was going to make it up a little higher than that, honestly. ARKQ is just the worst version. This is the autonomous technology one. But this chart looks like all the other arcs. Very weak. Only got up to the 0.5. Tons of resistance to this area. And then the weekly looks worse as well. It is slightly above the 821 and crossed back to the upside, but it's barely hanging on to get the hard buy signal, but it's showing weakness, as where ARKK is showing strength on the histograms. Shopify looks good. On the daily, it does not look great, but on the weekly, very strong at the all-time highs. Hard buy signal, bunch of green histograms above the slope line. Looks strong. These last few are like the strongest looking ones. eBay broke out there. Could get a little pullback, but it looks strong. Back above the slope line, all green in the bullish control zone. All-time highs. I hope it sells off a little here and I can get a better entry, but I really want to get into this one. eBay looks good. Zoom broke out from that channel. Looks a little weak on the daily. Again, I expect a little pullback on some of these, but I want to see this top like hold right here and then take this entry, and we could get a nice entry. But hard buy signal, bunch of green histograms in a row. I think Zoom has got some serious potential long term also, so you can tell how I feel about these last few. PayPal back at all-time highs again, showing a little divergence signal here and a little weakness on the daily. But if we go back out to like the weekly chart here, I mean, this thing looks good. Looks like we're about to get back above the slope line. All green histograms entering the bullish control zone. PayPal is definitely on the list. Apple at the all-time highs again. Looks like it could show a little weakness here. Could easily bounce that slope line on the daily. But if we go back out to the weekly, we got the hard buy signal. Multiple green histograms in a row. Now, we are still below the slope line here, but all-time highs and Apple is strong. This one's definitely looking good. And then Amazon, new all-time highs after like a year consolidation. Looks good on the daily. Looks good on the weekly. We're about to cross back above the slope line. If we don't get rejected here and get like a throwover situation, this is going to look real good for continuation long term. Nvidia looks a little weaker. Sell by sell on the daily. Multiple red histograms. Look like it's coming back down to that 21 moving average. On the weekly looks good. I'd like to see it come back down to the 1.618 around like 734. But we're in the bullish control zone. All green histograms. Blue above the slope. I'm looking for an entry into an Nvidia. Semiconductor wise, I think this is the way to go. Maybe an ETF. I don't know. But Nvidia definitely looks good. So yeah, let's finish off with our commodities here real quick, and then we'll call it a wrap there. Quiet in the chat today. Hope everybody's doing all right. You guys must have lost your voice. Oh, wait, no, you just type. Y'all better type something. What's up? What's up? What's up? Say what's up. All right, so Zao, gold. Oh, I think I have something different to pull up today. XAU on the daily. Getting the hard buy signal, but looks like we're getting ready to get rejected at the 200s. I do not like this chart on the weekly. The weekly saved the 821 cross and then sold off back down below it, getting the hard sell signal, getting rejected off the slope line, all red histograms below the 821. It looks like this is getting ready to capitulate. And the last time it did that was right back here. It did the exact same thing. Came back up, retested it, sold back off, finally came back up, put in a new high, and then sold off and went into a multi-year horrible, horrible bear market. So Maybe people are not afraid of inflation anymore and they're starting to wake up on deflation. But gold is not just an inflation hedge. It is also good for like times of like uncertainty. So maybe we see a little more strength out of this. But all red histograms, sell signal on the monthly, sell signal on the monthly, all red histograms breaking down below the slope line. This looks very, very similar to right here before gold got like a capitulation move from, let's just say from the 8. I mean, it ended up going down 37%. So I mean, we'll see. XAG, silver. Silver looks decent on the daily, still above the 200 exponential and simple moving average, but on the weekly, it never got the 821 cross to the downside here, and now it's below the 821, about to get the weekly cross to the downside. So this week, silver needs to do something. It got rejected at the slope line here, and then below the slope line here, the slope line flipped over red. All red histograms, about to get the hard sell signal below the 821 on the weekly. Silver looks like it's getting ready to give up. It looks like it's getting ready to give up. This is a bullish pattern, an ascending wedge at the top of the range. You would expect this to break to the upside, but it does not look like that's what it wants to do. 2 red histograms in a row, potential to get the cross and rejection of the bullish control zone. I mean, silver could really get hit here. A lot of people paid way too much in premiums, and they're really going to capitulate if they start to lose money, and they paid an extra freaking $4 to $10 an ounce premiums. XAU, XAG is strengthening like we expected it to. Multiple green histograms on the weekly. Blue slope line now. Stochs are headed to the upside. We are at resistance now. Next level is going to be up here at like the 75 level. This looks like it's getting ready to make our move. It's going to happen slow. It's on the weekly, but it looks like it's getting ready to make our move. On the monthly, the last time we were down here in the bearish control zone and we got the hard buy signal, we went on a multi-year parabolic rally to the upside. So here we are, 1 green histogram, getting ready to leave the bearish control zone and get the potential cross, hard buy signal to the upside. I mean, is it going to go on a multi-year uptrend like this to new all-time highs? I don't know, but that does not look good for silver. And that probably tells me that either gold has gone absolutely parabolic, or if the gold chart is telling us something and the gold-silver ratio chart is telling us something, it's telling us gold is going to strengthen compared to silver, and they're both going to go down. So that means silver is probably going to get wrecked, and gold's just going to get less wrecked. That's what the combination of these two charts is saying. Do I want that to happen? No. I love precious metals. I have precious metals, but it is what it is. It's technical analysis, not fundamental. So XPT, platinum on the daily looks good. On the weekly, it does not look so good. It's trying to hang on to that 200 exponential simple moving average, and it is for now. On the weekly, all red histograms losing the slope line, flipped over red here. Hard sell at the top of the range, parabolic, strengthening to the downside. This thing could get absolutely wrecked. 821 have crossed to the downside. On the monthly, it's getting rejected to 200 simple. I mean, I don't know how much downside potential this has, but it doesn't look good. The weekly charts are what's really getting me on a lot of this stuff. Okay, here's a chart I showed off in the trade group that I have not talked about here on the channel, so we'll do a quick look at this one. This is XAU, gold, is the gold one right here. XAG is silver. That's our silver one, our gray one right here. XPT, platinum, is our blue one down here. And XPD, palladium, is our pink one right here. So this shows us the percentage moves that they have had since 2008. So back here at like 2007, they were all pretty much the same. They've been moving in tandem. Here we saw little divergences between them. Like some moved a little more up, some moved a little more down, but overall they stayed relatively close to each other. Here we saw silver kind of go parabolic in 2011, and then they all kind of came back into line here. And since then, platinum has been underperforming, silver has been underperforming, gold has been, basically our baseline or overperforming compared to these two, and then palladium has gone absolutely parabolic. So what do I think is likely to happen? I think these are likely to come back into line with each other. So I think platinum has probably the most upside potential short term, or like ratio wise to the others. And I think palladium has the most downside potential in ratio to the others, especially because platinum and palladium are essentially interchangeable, with platinum actually having more functionality in diesel rigs and gasoline engines. Well, really it's in their exhaust. As where palladium is only used in gasoline engines, cannot be used in diesel engines. So this tells me that we could very easily see platinum and palladium cross back at some point in time. When is that going to happen? I don't know, but the current value on platinum is like over double what palladium is. So no, the other way around. Palladium is over double what platinum is right now. So I think there's a very high likelihood that they meet somewhere in the middle, maybe around like $1,200 or something, but we'll see. I just think that's an interesting chart to look at, to keep into mind what precious metals you should be buying and why. USAS saw a little rally off the bottom here. We'll have to see how this plays out. It's hard for me to get into these miners right now with how bad the precious metals look. First Majestic looks like it's breaking down from a key level, breaking down from 200 exponential and simple. These miners are going to be good plays long term, but not now. ACB, Aurora. Oh man, these pot stocks look weak too. They look really bad. This thing lost its weekly cross on the 821. It's getting the hard buy signal. It's still above the blue slope line. It really needs to rally here. It really needs to reclaim that cross to the upside. The weekly looks terrible, and it still hasn't gotten above the 8 yet. Hard buy signal, a bunch of green histograms. I think these are bottoming out. I hope they're bottoming out. I'd like this inverted head and shoulders, but could we see us come back down here to like $5? I mean, we really could. Really could. Tilray's the same thing. I really like Tilray and everything, but I mean, these things are showing way too much weakness here. Maybe it's just going to be a better buying opportunity if we're patient. 821 is crossing back to the downside here. We're getting the hard buy. We have lost the histogram is below the slope line. It's still blue, but I mean, is Tilray going to come back here for a deep retracement? Like, I mean, I hope not, but it's definitely some potential here on these pot stocks. I mean, it had reclaimed the 8 and now it's lost it again. So I don't know. Doesn't look good, man. Doesn't look good. CGC, Canopy Growth is weakest. Hard buy, but multiple red histograms. 821 weekly crossing down. Lost the 200 exponential and simple moving average. I mean, these pot stocks look so weak. It's about to get the 821 cross to the downside on the weekly. Last time that happened, it went from $31 to $9. So do we want to see it go from $25 to, what, $5? This is a very clear rejection of the slope line. Very clearly about to get the hard sell signal on the Stochs on the monthly. These pot stocks look really bad right now. I mean, I'm not done with them. There's still a chance, but they look really bad. THCX, YOLO, basically the same thing. I mean, just a little more diversification. UEC, Uranium Energy Core, on the daily, looks like it's got some upside potential here off the 200 exponential and simple and the 382. But again, had a nice rally already. And on the weekly, we're about to get the 821 cross to the downside. So we need to get above $2.68. All red histograms below the slope line. Hard sell signal off the top of the range. I mean, look, I love these things long term, but there's so much weakness on the weekly charts. URA, same thing. Weakness, possibly some short-term upside potential, but breaking down from key levels. Red histograms, hard sell signal, divergence signal at the top of the range. Still has the 821 for now, but if it breaks down 1691, I mean, we'll see. CCJ, Cameco Royalty, Uranium. Man, so much weakness on this chart on the daily. Already got the cross. Measure move is like $14. The weekly chart, it's hanging on to 21 for now, but it looks like it wants to come down to like $14. Hard sell signal out of the bullish control zone. Multiple red histograms still above the blue slope line, but looks bad. Copper, 821 cross to the downside, trying to hang on here. Looks like it could have some potential bullish move here, but it broke down from a key channel. Let's turn off the moving averages. Broke down from, it's between the 8 and 21 now. If it breaks down from here, we're talking $23 on CPER index fund. Hard sell signal, multiple red histograms below our slope line. And then if we switch it over and turn off the moving averages, we broke down from our channel with the measure move down here to like $20 to $22. Looks bad. All these trades got way too crowded. Everybody was talking about them. Everybody was late to the party, and now they're dying. Lithium looks amazing. breaking out to new all-time highs. Probably one of, if not the strongest commodity chart right now. Weekly all-time highs, strength, multiple green histograms, about to reclaim the slope line, still blue. I mean, I'll probably take, honestly, man. Yeah, I might have to just add to this position. I mean, it's at elevated levels, but it looks like it's coming back down to bounce the bullish control zone and see a little more upside potential like it did right here. And I mean, from there, look at it, it just went parabolic after that. You know, after it broke out, it went up another 52%. And we have Fibonacci extension targets up here at like $85 and the 1.618 at $98. So, I mean, what are we looking at? From where we're at right now, we're talking 10 to 27%. Yeah, that's a good one for sure. We'll talk about this stuff a little more in the group too, because I'll go into a little more depth. But this is going to be on the list as well, guys. LBS1, lumber futures, the old lobster, the wooden lobster, hard buy signal out of the bearish control zone, bunch of green histograms, and then put in a lower low or rejection basically at the 618. I mean, I don't like how this looks. Weekly cross to the downside powerfully. It looks like it's going to go lower. Multiple red histograms, just lost the slope line, hard sell signal, about to enter the bearish control zone. I mean, even the monthly, we're barely hanging on to the 21. If this thing drops from the 21, we're talking like $543, another 50% to the downside. All bearish, everything bearish. Maybe a little short-term move up here, but I mean, there's so much lumber built up everywhere right now, like stockpiled, that that was a bubble. The old wood bubble of 2021. Cat breaking down from a key channel. Massive upside potential still. But for now, doesn't look good. It already got the measure move of the actual breakdown. But on the weekly, it just looks like it could have an extended like bear market type period. We're about to get the 821 cross on the weekly. We really need to save like 221. Love the stock overall, but not right now. Not right now. I got to see something. Got to hear them diesels rumbling back into action. What's that tell you about the infrastructure package? Deer is the same thing. Deer is the same thing. Barely hanging on to the 821. Slightly more bullish, but it lost this channel that it was operating in for the last like over a year, and you know, tried to reclaim it and didn't. So I mean, I expect this thing to go down another $100. I mean, at least to 291. All bearish on the weekly. Monthly still looks okay, but not for long. It's about to get the hard sell signal. Multiple red histograms in a row. Broke down from that channel. I mean, all these trades are way overcrowded. This was like the infrastructure trade when they first talked about it. AM and Taro, they do like water stuff. Like, there's definitely some potential on this thing. Breaking to new highs here. I'm still in this position. I'm skeptical because of the bearish divergence, but maybe we see some continuation. I mean, we could easily get rejected at $11, $12 up here. But we save the slope line, multiple green histograms, still above the blue slope line, inside the bullish control zone. I still like this trade for now. It was starting to look a little sketch there, but I didn't close my position, and this is what I really like. I love when we get an 821 cross on a monthly on something that's been going down for years. This was going down from 2017 and bottomed in March of 2020, and now here we are massively up at the 821 cross on the monthly. This is the type of thing that, now granted, I would rather see it not, you know, below all-time highs. But when we get an 821 cross like this, this is those value investments. These are those value trades where you get like legitimate potential for, where you get legitimate potential for massive gains. If we get up to the 786 and we don't break down from the 0.618, that's 21% to 25%. So it's like 1 to 1. There's not a good risk reward there. But if we look more at like this level, at like 10%, if we take out this previous candle, you know, that gives us a good entry that we could get out of quick with a minimal loss with a nice target to the upside. But in all reality, that's not what we're looking for. We're really looking for we're looking for a big boy trade here. Long term, nice, just set it and forget it type thing. 60% to the upside, 10% to the downside. And then, I mean, God willing, this thing ends up breaking, back to all-time highs. So all it's really done is sell off since then. 116% to the upside with 10% risk. All strength, bullish control zone on the monthly, 821 cross, all green histograms. I mean, it got a nice little consolidation at the top of the range here. Looked a little sketchy, put in a little divergence. We'll see what happens right here. We could easily see a little sell-off. I would have rather, strengthen my position at like $10. But, we're only 50 cents off that and potentially breaking to new all-time highs. Or new cycle highs, I should say. This is one to watch. I'm still in a position on this, but I may add to it. And again, we'll talk more about that this week. CX, Cemex. This is I think they're #1 North America cement supplier. I want to say it's United States, Canada, and Mexico. But CX is the ticker. We got to watch this one. Again, it was looking a little sketchy. Definitely some potential divergence here at the top of the range, little bearish divergence. But if this channel can hold, I really like this. Been operating inside this channel for a while. If we break down from it, it's going to take a hit, But if we hold right here, it could look beautiful. So I'm really watching this one. I mean, there's definitely a potential for an entry at this point in time. Again, though, let me go to a longer time frame. That's our top, but I mean, there's some serious potential here. Again, 2007. It's been in a bear market since 2007. We're at a key level to be topping out now. But if we get a nice value play right here, or we start breaking through these resistances, this thing, double up, basically almost a triple up from here and back to all-time highs is, somewhere in between here and here is a triple up. We'll see, though. It's going to be tough getting through like $12. But again, I'm still in this position for now. In the bullish control zone, all green histograms, blue slope line. I mean, it's just been marching back up here beautifully. But we got to be careful. It could easily consolidate or have a sell-off from this point in time. But right now, still looks good overall. The weekly looks like much worse, though. I think, man, I'm tempted to just... I'm definitely not going to add to this right now, but I don't think I'll exit just yet. But again, I think this goes in with the infrastructure stuff where it's just too crowded. This was one that somebody had requested in the group, CLF, Cleveland Cliffs, steel, massive steel manufacturer. Again, this is tied in with the infrastructure and looks very similar to that one, a little more bullish than Cemex, but CLF is the ticker inside that same channel, that same industrial channel that everything's been basically in. Still holding. Looked like it was going to break down, but got a powerful push up here. Got to be careful, though. It doesn't put in new all-time highs and new highs here and put in divergence. But if we go out to our longer time frames, these charts are all the same. 2008 back here was the high. Sold back off massively. It's at the 618. Potential area to top out. But we could easily get an entry at like $12 on this if it sells back off to this key resistance, flip support, and then, see a massive move back to the upside on this. But if this area holds, we could see continuation, but this is a key area where I'm looking for a top here. And then again, on the weekly, we have some divergence playing out or potentially playing out. It's hanging on for now, though. But again, these last two look a little sketch. And then last but not least for today, Ford Motor Company. Ford, the old FU. Or no, just F, no U. Had a low here, topped out at the 786, came back down to the 382, came back up to the 786, back above all its moving averages, angled to the upside. Looks decent on the weekly. Got to be careful here. It's putting in a little divergence at the top of the range. I am still in this position for now, but I mean, I think we'll get a better entry back into it. This candle looks extremely bullish. This shooting star, I'm sorry, bearish. Shooting star and then a bearish engulfing candle, barely holding on to support. Bullish control zone. Looks like it's getting ready to roll over on the monthly. I'm about ready to get out of this. If we break down and close like 1 or 2 candles outside this range, I mean, at that point in time, shit, it might be too late, but I'm probably getting out of this soon. 821 cross on the daily. We'll see. It's coming back down here to like 13, 14 bucks. Yeah, this just looks like it's getting ready to let go, at least short term. I will probably de-risk from this from now and not take a chance. I think those last 3 I'm not in the Cleveland Cliffs one, but I feel the same way about those last three. But yeah, I think that's it. We knocked out everything. We did it in record time, not 2 hours and 35 minutes. I was shooting for 2 hours, so we didn't go like crazy over, but it's all good. Went into depth on everything. I probably spent a little too much time on crypto in the beginning, but I know that's what everybody wants to see. I'm trying not to be overly bearish. We did find a little potential this week. We'll see how the price action looks. Remember, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Yeah, bro, I am tired. Oh, yeah. Yeah, those fights were awesome. England's crushing it. I don't no spoilers though. I gotta watch the game after we get off here today. I did not watch it earlier, but I've been pumped to see them do as well as they've been doing. Um, but yeah, I think that's gonna call it for today. Appreciate everybody tuning in. Appreciate the likes, subscribes, all the positivity. I will see you guys in the group. If you're not in the group, you want to be in the group, message me. If you already messaged me and I didn't message you back, I think I messaged everybody back at this point in time. Yet to hear back from a couple of people. So hit me up if you are still interested, but I haven't yet. Hit me up if you are interested and I have not spoke to you. And yeah, I think that's going to do it for today. That is our Sunday night look ahead. It is 10:39 on Sunday, 7/11/2021, and this market's going to be fireworks. We're going to see some serious moves this week. I am sure of it. Tons of potential in these markets. Finally identified some legit stuff. We will have some nice trade setups this week posted in the group, and we will be doing the first installment of the retirement fund. So that's going to be exciting as well. Look for that one. That'll be a static video coming out. Yeah, that's it for tonight, guys. Appreciate everybody tuning in. God bless you all. Everybody have a good one. Stay safe out there. I don't want to tell you because I don't want you to say anything. No, I'm rooting for England. I love England, man. But yeah, that's it for tonight, guys. Crypto Trend Trader, and I'm out of here.